Okay, we are live. Good morning, everybody. How you doing today? It is Tuesday, the 28th of September. Had to get the date right there. We are live. Good. Going to turn off that little sound button there. We are live on the 28th of September. It's Tuesday. Welcome one, welcome all to the show. We have a lower opening indicated in the markets, but not a nasty opening actually. So we'll see if this has much to it. A couple of things are going on to create the markets the way they're going. I had heard this morning that as of at the moment, right now, with the with the Dow Jones where it is, it's off 4% from its high, all-time high, and I don't even know if that's accurate because I think we reached a high of 35,000 roughly on the Dow. Let me just double check my little statistics here. There we go. The Dow for the high 35,631, and right now we're 34,600. So it's 1,000 points off the all-time high. That's 3%. So the Dow off only 3% from its highs. In some circles, what we would call that, again, old school boomer stockbroker talk from the 70s, 80s, and 90s, we would call this maybe a correction. Maybe we need another 2%, between 6 and then 10%. We'll call it a correction, and that would be a good thing. After a run that you've had, it's just been straight up. You kind of need a correction, but I don't know if this is a correction. I really don't know if this is a correction yet because we're just not getting the volume on the sell side. We're not getting the panic selling. We're not getting the doomsdayers all over the place. We're just not getting it. We're getting little indications of supply chain problems, the odd inflation issue here and there. Certain commodities are in short supply in certain regions of the world. Supply chains problems are appearing everywhere. But it's not. This is not a recessionary thing. This is not because people have run out of money to buy stuff. It's not because governments are, or let's say central bankers are pulling in money reserves to calm economies down. Not happening. We haven't had an overheated economy for a while, and so this pullback is, I think, a reactionary pullback. And as they're using in the big terms they're using now, the fancy words, transitory. It's all transitory. It's transitory inflation. It's transitory supply chain problems. It's transitory economic condition. Okay, it's temporary. I get it. All right, fair enough. The good news is that, yes, there are $17 trillion in American savings accounts or cash handy to have, to spend. Real estate prices are much higher than 2 years ago without a bubble. We have inflation, we have interest rates very low, even though we've had a slight rise in the last week or so. A 10-year 1.5% yield instead of a 10-year 1.3% yield is not a recession creator. It's not how this works. How this works is, in order to go into a recession, the cost of money has got to be double or more the cost of inflation. So in the old days, when I was in my 30s, oh, I wish I were in my 30s. In those times, if you had inflation of 4% and you had interest rates going to 8%, you had the makings of the right stuff. You had the ingredients now to perhaps cause a recession. If you had central bankers trying to curtail the money growth, trying to calm inflation down by lifting rates, trying to slow down an economy, trying to get people not to go after 10% raises, but go after 6% raises, this kind of thing, you would then have the ingredients for a pullback where people will try to buy less because they are getting denied credit. This is where the other recession thing comes in. It's when you go to your car dealer and you want to buy a new car, and they don't offer 0% financing at the dealership. When the car dealer doesn't offer $2,000 rebates, and and this kind of incentives. It's when they basically want you to pay full price, or you got to haggle with the dealer one on one. Good luck with you, and you got to find your own financing. And your banker is saying to you, "Gee, Bruce, you've been a loyal client of ours for 15 years, and you've never missed a mortgage payment. And we love you, but we think right now with your exposure to what you have exposure to, we think you might be a little overexposed. We really would not feel comfortable giving you a loan at this time." It's when that happens across millions of Americans and Canadians and Europeans simultaneously, that causes a recession, because all of a sudden the big ticket items are not available to people who would like one, and that stops dead an economy, and it stops dead a global economy for a while until things equalize out. So we don't have that. We're not seeing that. You're looking at ads on television right now when you're watching your favorite baseball game or football game, or your favorite show on network television. When you see ads on your computers, on your handheld devices, from various car companies out there, where they're offering you 0% financing for 84 months. Folks, money is available everywhere. Capital is dying to go to work, is dying to be borrowed, dying to be used, and so we're just not going to see. We're not going to see a recession here. There is no ingredients in place to even cook one up. I can't even see one going forward. Like, I don't see anything recessionary in the economy for the next 6 months, the next 2 years, 3 years. There's nothing, nada. Now, yeah, a couple of, let's say, inconveniences are happening right now. Okay, we have oil at 75 to 80 bucks a barrel. Inconvenient. We have the odd inflationary spike show up here and there. We're not showing interest rates taking off. It's not like mortgages are all of a sudden 5% versus 3% last month. That ain't happening. We've got the odd supply problem. Yep, you're going to a certain store, or you're looking to remodel maybe your kitchen or your bathroom, and certain pieces that are important to the remodel are holding things up because they're not available right now through your contractor. You can't get whatever it might be that you need. Sure, yeah, that's happening. But this is not a disaster. This is actually a pent-up economy being the steam is building up inside the kettle, and it's about to blow open when conditions allow. It's a man-made problem. It's a human-to-human issue. It's not war. It's not like we have world wars and we have supply problems because warships are blocking commercial shipping routes. We don't have iron ore ships being torpedoed in the Pacific and all the iron ore going to the bottom of the Pacific Ocean. We don't have that. So it's not like the 40s and 30s when Britain was really in a recession because they couldn't get goods into their island nation. No, we don't have that problem. And there isn't anything like that brewing either. So this pullback is likely temporary, is likely muted, and will likely run out of gas rather quickly. The other thing that you who watch me regularly, you hear me talk about this all the time, and those of you who are just joining me for the last little while, remember one other big elephant in the room, a huge elephant in the room. Yeah, stocks are backing off here and there. Like, for example, Microsoft is off again, and Apple is off again. Yep, they're down a little bit. But guess who's buying up the stock? Who's picking off these stocks at these cheap prices? The companies themselves. It's not pension funds and mutual funds and ETFs that are buying up the stock. It's the companies themselves. They're buying up their own stock. And Apple is buying $90 billion of its own paper a year. That's $7.5 billion a month of paper. 3-point-something, what was it, 7.5 billion? It was 1.8 billion a week. I mean, it's 300 something million a day. So every 3 days, Apple buys $1 billion of its own stock. Just sink that in a little bit. Just kind of grab that and Let it happen. $1 billion of stock is being purchased by Apple of its own paper every 3 trading days, all the time. And they're just going to keep doing it. And so, as impatient or nervous or upset or whatever the term is of the seller, whatever the mood is of the seller, Apple is there to say thank you. Keep selling us our own stock. We're buying 90 billion of it, which is not even 5% of our company. We're 95% of the stock we're not buying back. We're not allowed to. If we were allowed to, we'd buy more. But the SEC only limits us to 5% a year. So we'll max it out and we'll buy 5% of our stock back every year. And Oracle is doing it. Microsoft is doing it. I'm not sure about Intel, but Amazon, Google, Amazon, probably Facebook, all kinds of companies are buying up their stock, and that keeps the markets buoyant. The bad news, long term, though, and this is the thing that very few people want to talk about this officially, and your friends, which aren't your friends, just so you know, your non-friends at Wall Street, the investment bankers, they won't talk about this because if they talk about this, it's like stabbing their client in the back, and that you don't do that when if you have an account where Apple calls your desk and says, I want you to buy 1 million shares of Apple today for our account. You don't make these guys angry so that they don't call you anymore to buy stock through you. You don't do. So what aren't they saying? What aren't they saying that they should be saying that I can say? Because Apple doesn't call me and say, hey, Bruce, you run a trading desk. No, I don't. You buy 1 million shares of our stock. I can't do that. But I can tell you this. Instead of Apple putting $90 billion a year into buying up their own stock, they could consider putting $90 billion into some increased dividends, giving shareholders a revenue, and or, on top of that, combined with that, building new factories outside of, a place like China. Maybe you could build factories outside of a place called China. And you wouldn't be so dependent on the communist thugs running the thing over there, and you'd have a little more independence. Unfortunately, companies like Tesla and Apple and others have made a deal with the devil to build plants in China to have access to the Chinese market. It's miraculous that if you don't build plants in China to develop product there, that you've designed in America, you've designed and engineered in Europe, you've designed and engineered elsewhere. Under license, you produce it now in China, where of course, inside the factories, they have all the undercover people to steal these plans and blueprints and engineering documents, so that within a few years, they start producing the knockoff version of your product under another brand name in China. And you can't do anything about it because you made a deal with the devil to build a plant to then get access to the retail market that China has and the growing retail market. And so you have companies who are sacrificing long-term, I think, stability and future growth by selling out short-term deals to produce product in China to have access to the Chinese market, while at the same time being robbed blind through the back door by these guys who are stealing your trade secrets. But I'm just an old guy. What do I know? Maybe I'm just not trusting enough. Maybe that's my problem. I must have issues. I just don't trust communists. I guess that's probably what it is. Instead of trusting the rule of regular law and World Trade Organization law, I don't seem to want to trust the communists, and that's maybe my big problem. I guess that's probably it. Anyway, there you have it. So Apple and others are spending billions and billions of dollars, and you combine it all with all the companies that are buying back stock, and it's trillions of dollars of stock to keep these prices lofty. Because at the end of the day, Tim Cook doesn't own Apple. He just runs it. And if you take all of Tim Cook's stock and his stock options, And if Tim never sold any of his stock, which he does, he sells his stock a lot, he gives money away to charity and all. He's a very honorable gentleman. But Tim Cook would never have been able to become the dominant shareholder of Apple and be able to run the company the way he sees fit, like Henry Ford. Um, um, all the other large companies out there, many of them out there, if you really take a look at how many shares the founders of these companies actually own, you'll find that they don't even own 50% of the companies anymore. They own a minority stake, a very small stake, and they are now beholden to the board of directors for their existence. So Mr. Cook can be fired at any time by the board. They can ask him to walk. He would get a big fat check to take a hike, but he doesn't control his destiny. So his destiny could be somewhat affected, and thousands of other CEOs are definitely affected with respect to their security, their job security, by the stock's performance. And as long as the shares do well and hold their own against everyone else in the field and so on, you're going to keep your job, and you're going to keep getting stock options, and you're going to keep getting the perks of being a CEO of a very valuable company. But if your company doesn't perform equal to others, you will likely be shown the door. And the problem is that all of the competitors that a company might have, if 90% of the competitors that you're up against all do stock buybacks, because again, none of the companies that you're up against are run by a founder. They're not run by a family that controls the company. Then they have to. They're under pressure to compete against the S&P 500 index, or against the Dow, or against the Nasdaq, or against competitors. And one way to help to deflate the possibility of a down dip on your stock is to do stock buybacks. It used to be you would increase the dividend, and you would get bankers and mutual funds and hedge funds and ETFs to buy into the stock that had a higher yield, and that would be the way to go. But nowadays, the idea of buybacks are more appealing, because in a good financial year, your company can do a stock buyback. In a bad financial year, it is expected and it is prudent that you cut back the amount of stock you buy back. But when it comes to dividends, this is untouchable. Once you set a dividend rate, say 25 cents a quarter for $1 a year, you don't dare ever cut back the dividend unless your company is about to go into insolvency. That's the last thing you do, because what you have here is the image and the perception of taking away grandma's income, because there are many shareholders who hold mutual funds, ETFs, for the yield. And the last thing you want to do is upset these funds by cutting back your dividend, because if you do cut back your dividend, even by 20%, you may find that half of all the ETFs that own your stock, or mutual funds and pension funds, start reducing how many shares they hold in your company, because you don't pay the income you paid before. Whereas if you have a dividend of 25 cents a quarter, and you could afford to pay double that, but you don't. You only pay the 25 cents a quarter in dividend, and the remaining 25 cents that you could have added to the dividend, you use that money as stock buyback money. You're giving the shareholders on both camps something to cheer about. You're giving investors who are bringing income in, dividend income in, some money, and you're giving the growth funds, all the ETFs and mutual funds that look for growth stocks, you're giving them something to cheer about, because you're buying back your own stock on the market. Once in a while, you have to cut back your buybacks because economies and businesses fluctuate. The growth stock guys understand that, and they're more forgiving than the yield people are. Yield people are very unforgiving, because they'll get out and they'll stay out. Where growth players will play with they'll get in, get out, because they too are getting the dividend. Don't forget, everyone gets the dividend if you're a shareholder. And it might tamper how many of the growth people dump your stock quickly, because, well, they'll go, well, they're not buying as much stock back this year as they did last year, but that dividend sure looks pretty good because it's solid. They'll never cut it. And that's why, because they can afford double that dividend in reasonable times. Strategy. Again, all strategy by managers that don't own the company. They only own, if you add up all the shares the board of directors have as a group, you might have 4% of the entire company represented in that room. The other 96% of the stock held by shareholders are institutional investors mutual funds, hedge funds, pension funds, and private investors globally. Could be 1 million shareholders out there that own that stock, and not one of them owns more than 2% of the company. So there's no one person you can go to say, hey, you think this is a good idea? Can I have your permission as the majority owner of this company to institute a new dividend policy or a buyback policy? No, none exist. And so it's done by committee, and it's done by consensus, and it's done by how the market is doing. What's everyone else doing? We'll do what they do. And that's how this game works. So unfortunately, in the case of Apple and other companies where they could theoretically increase the dividend and pay way more money to average shareholders and mutual fund holders and pension funds and trust funds, which would then dramatically increase their revenues. Cash flows would dramatically increase. Dividends to their unit holders would dramatically increase, which would mean that a certain segment of this world's population would be richer. They would be bringing in more revenue. They're not getting that. They have to hope for two things to work out: that the dividend comes in as it is, and that the stock will go up to make up the differential. The other problem, of course, is if the company were to not do the buybacks so aggressively and they were to invest in their actual businesses, which is what founders usually had done. The Henry Fords of the world would make $20 million in profit in 1928, and they would just put $20 million back into the business. They'd build another factory, or they'd build an addition to the factory. They would improve efficiency inside the factory. They would improve their distribution network. They would just invest in their business. And then the next year, they would make $28 million in profit instead of $20 million. And they would invest that into the business, and the next year make 32. They would have all this cash lying around for the bad times, for slumps. They would owe no money. They'd have no debt. They wouldn't be beholden to any banker. And these owners would be wealthy as wealthy can be, and their companies would be wealthy as well. That's not the way it works now. Companies are leveraged with debt. They're leveraged with bonds, and they're leveraged on cash flows. And they don't. They now think globally because they can, and they look globally to produce product at a much cheaper price somewhere else. And rather than make it domestically, they'll make it in a foreign location and import it back into the country. And then they pester through lobbyists, the senators and the congressmen in the capital, the U.S., and then they pester senators and other representatives in all 50 states they do business for the best tax treatment they can get. And when they do look to build a factory, say Apple wants to build a factory to make computers, and Tesla wants to make a factory for cars, and Boeing wants to make a new factory, build a factory to make new planes, what do? Like with Google as well, they have a competition. And they find out which of the 50 states will give them the biggest tax breaks to build their plants in their states. And the tax revenue coming from these companies will be minuscule for the first 5 or 10 years, because the governors of these states are under pressure from their party members to make sure that Apple opens a factory here, or get the Tesla guys to open one here, or get Google. And so you hear in the media from time to time where there are 10 states in the running for a plant, then there are 5, and then you hear the kind of numbers being offered by the 5 finalists to get these companies to commit to build in their states. And it's shocking, because the states that are bidding for these factories are the poorest states in the country, some of them. They're really in rough shape. They have a lousy tax base as it is, and they're giving away the farm. And they're not going to get any extra money from these companies for a decade. And even then, the companies could change their minds and go elsewhere and do something else. I mean, these guys are signing blank checks for the hope and the prayer that whatever product is going to be made at the factory that these guys are going to build will actually work out, and in 10 years still be wanted by the rest of the world. It is crazy. And yet at the same time, while this is happening, they're still up against other states for other pieces of the company's business. You didn't build the big factory in our state, but how about a distribution center in our state next door to the one you pick? We'll give you a deal for the distribution center. They're nipping away at the exterior of that deal to try to get their share of the deal, and nobody makes any money. The companies do. The companies do well, but the reality is that companies have have decided now in the last 10, 15 years, it's just cheaper for them. And on every level, why are we bothering opening anything anywhere in America? Why should we deal with the environmental rules? Why should we deal with all the work rules? Why should we deal with all the health safety rules, the EPA, the environmental group? Forget that. Why don't we just open up a plant in Vietnam that used to be a rice paddy? We'll open up a plant there, and we can pollute the Jesus out of that place, and we can drive the workers into the ground, because we're not the bosses, we're not the owners, we're just licensing out the production of product in a factory in a place like that, and how they get to the bottom line of producing that item for maybe 1/10 the price that we can make it for in America. We don't care. That's their problem. And this is why you and I hear problems for the last, we've heard these problems for 20 years. Foxconn, China, Apple products, workers committing suicide, just not showing up anymore, quitting in complete frustration, being abused by their managers. Just horror stories for workers, horror stories, so that Apple can get these items at super cheap prices, which then allows them super mega massive profits, because they don't give us the super cheap prices. we don't get to buy the Apple phone for $79.99 because it costs $29.99 to make. No, we pay $1,400, $1,000 for the top end Apple product, and they make a killing without hiring any Americans to make it. There you go. And welcome to the world in which we live. Coming back to today's market, we don't have a big sell-off going on here. we don't have a bunch of companies listed on these stock exchanges in North America that have plants with tens of thousands and hundreds of thousands of workers in Michigan, Ohio, Pennsylvania, New York State, Illinois, Indiana, where they're all going on strike for higher pay. They don't have factories in these regions anymore. The Teamsters Union doesn't control these companies like they did control them back in the 50s and 60s. It all went out, the equilibrium went out of whack. Management of these companies have figured out a way to avoid massive labor issues in North America, and it's called outsourcing. And rather than deal with the unions and offer these guys all kinds of perks and payouts for their employees, they're better off to just have a factory built in the third world somewhere, maybe Sri Lanka, maybe in other areas. China is now literally building factories outside of China. Scary enough, they're building them in Chad and Niger and Democratic Congo, because they feel they can handle them. They can handle those guys. They can handle the dictators that run these places, because they're dictators themselves. So one dictator to another, they're saying, we've got the dough to build a factory, and we can hire 50,000 of your people to work for $1 a day. Are you interested? And the dictators are going, yeah, that'd be great, because this way they won't join the army and overthrow me. This is fantastic. In North America, North American companies aren't quite going that far, but they are going to other countries for the product to be made, to not hire Americans. Simple as that. They're not going to hire Americans for the assembly of product for their low-end workers. They're not doing it. But they will never tell you about it. They'll never talk to you about it, because it is politically very difficult to justify, and it is the wrong way to be talking. It's very un-American. And so you you talk to your shareholders about cost controls and how we can generate the best return on our income. And one way to not hire Americans and keep everybody happy, or as many people happy as possible, is you keep the shares up. You keep the shares up at a nice price, so that the money you would have spent to hire American workers to make your product domestically, instead of using the money for that, you're using your cash, because remember, you're selling your product at full price in America. Okay, you make it for $50, you sell it for $800. The part of that money, which would have gone to labor in North America, now part of that money is used to do stock buybacks. And you're buying back the stock on the open market to keep the values up. and not have a situation where there are too many shares sloshing around. And that prevents market blow-offs. It prevents bad market runs because there's always a buyer for the paper. And a lot of you out there think it's the Fed doing it. You keep telling me, oh, the Federal Reserve is the buyer of all the stock. It's all inflated by the Federal Reserve and all these guys in Washington. No, it's not at all. It's done by the companies themselves. They are actually doing it. There are 500 companies on the S&P 500, and I wouldn't be surprised if 400 of them are doing stock buybacks. The top 100 of the S&P 500, I mean the big performers, 90 plus percent of them are doing stock buybacks for sure. And they control 60% of the S&P's value. So sure, the S&P can have a down week, a down month, a down year, but it's not going to have a crash for a full year or two like we used to have in the old days, because companies now buy back their own paper to preserve their existence. And in a way, it's a good thing for those who have pension funds, and for those, for those out there who have a lot of their retirement saved up in ETFs and mutual funds, looking for steady performance and good management of their assets. They don't want to be in investment funds that go up, down, up, down. When you're 70, 80 years old, you don't want to do that. You want to have steady growth and a steady stream. So you put your money into the big players. And they put their money into the biggest stocks who do the most stock buybacks. And so that cushions the blow between the jagged runs in the economy and keeps everything calm. And if the stock market is calm, many bankers are calm, because bankers do not see scenarios where you went to a bank to buy a car for $45,000 and you had $10,000 down. You had your old trade in, you had 10 grand, and you needed a loan for 30 grand. And the banker finds out that you also have stock or ETFs or mutual funds with stock in them. And the value of your portfolio is so much money. And so the banker goes, great, I'll lend you $30,000. I've already lent you money for your house on a mortgage, and you've got credit cards with us, and everything's fine. You're making your bills and you've got a job. It's great. The bankers now don't fret so much because the markets don't drop 30% on a negative reaction every third or fourth or fifth year due to recessionary talk. Markets drop 3-4% for a while and then kind of work their way back up. And so bankers look at your portfolio and go, oh, that's a solid portfolio. I'll leave this. I'm not going to call this guy and say, a little nervous about your car loan. You're never going to get that. And so that's better for the economic viability of the economy. Politicians look at it and go, oh, this is good. I don't want my voters from 2 years ago when they voted me in. Now 2 years later, they're all nervous about their jobs and their economy and their loans. They're not going to make payments, or their bankers are driving them for more money down, for more assets, because the economy is nuts. The economy is much more calm, and the stock market is much more calm. I, as a politician, will get reelected a lot easier every 2 years because everything is okay. Everyone's addicted to the deal. Everyone's addicted to the system working. And it starts from whatever level you want to look at it, from the presidency all the way down, or from the chairman of the board of a public company, or from the CEO's desk, or from the Wall Street bankers' desks, or from your kitchen table. Wherever you want to look at it down, you want stability and you want calmness, you want predictability, and this is one of the ways the stock buybacks you get it. And so with the markets right now, I'm looking at the Dow down 171 points this morning. Whoop-de-freaking-do. It's a 34,500 point index, and we're down 170 points. It's a nothing burger. Yet in my time, when I was a broker in 1978, in the 70s and 80s, if we had the kind of nonsense going on right now that we have in the world today, if this was happening back then, where people were actually refusing to get a vaccine that could save their lives, if that actually happened when I was a 25-year-old, unthinkable, because our parents remember polio. My parents panicked that I would get polio because I was born in '55. I was born just in time that within a few years I got the vaccines. For smallpox, chickenpox, measles, and everything, all the vaccines created that saved millions of us because our parents remembered their generation as children, how many didn't make it. How many families had children in the early 1900s, 1900 to 1930, that had 4, 5, 6 kids, and 1 or 2 of them would die before they were 5 and 6 or 7 years old from diseases that we've developed vaccines for in the meantime. Back in my day, it was unthinkable people would not get a life-saving vaccine, no matter how minuscule the odds were that you would get the vaccine. What can I say? It is a different world in which we live. Anyway, the markets back in the 70s and 80s, we did have those jolts. We had those really bad economic jolts, and they would be caused by a spike in oil and gas prices, a spike in interest rates, a spike in inflation, layoffs at GM. General Motors would announce 50,000 layoffs between, say, Ontario would get 10,000, Michigan would get 10,000, Ohio 10,000, and other states. And that would create a ripple effect of another 50 to 100,000 layoffs in other industries. Because General Motors buys tires from these guys. They buy steering wheels from those guys. They buy seats from those guys. They buy steel from these guys. All of these companies would be affected, thousands of them, by GM doing a cutback. And it would happen at Ford, it would happen at Chrysler, and then it would just keep accelerating. And no matter what governments did to try to offset it, they couldn't stop it because it was all domestic, a domestic slowdown within North America. Today, GM announces that they're laying off or they're shutting down a factory for a 2-week furlough or 3-week furlough. Yeah, sure, there are locals who pay the price in that city, of course, and there are companies around that area that pay, but not like in the old days because the dashboards are now made in Mexico. The transmissions are made in Taiwan. The drivetrain components or axles are made in South Korea. The tires are produced by whoever in Japan. It's global and it's spread out globally. It's not local. And so the local politician doesn't panic as much as they used to. The senator from the states the senators from the states that these layoffs took, they used to panic big time if the auto companies would announce a layoff 6 months before a midterm. Oh God, they didn't want to hear that. Please don't do that. Do layoffs 2 weeks after the midterm, but not 6 months before the midterm. I won't get reelected. Today, it's not tied like that at all because car plants today are just assembly points. They don't make the parts in America anymore for the entire car. It just isn't done, other than maybe Tesla with the original Tesla plant. Most cars are assembled all around the world in pieces and then brought in just in time manufacturing. Hence why we have problems with the Ford F-150 and other vehicles. They're missing parts. They've got parts problems, including chip. So the economy's completely changed. It's rolled over. And this is in a generation. This is in my generation from when I was in my 20s, 30s to when I'm in my 60s. The world has really changed in this way. It's amazing to me how it's changed. But a lot of people do not understand and do not get the interconnectivity of regions of the world and industries of the world, and how it can affect you personally. And you might be in the real estate business in Cincinnati, Ohio, and you have no idea, but you need to know that your local housing market could be affected if there's a problem in China with their ability to pay their bills to their other industries, because the ramifications of the shock wave reaching out will eventually reach out to America, and it could reach out to industries that are near where you are that you had no idea were so interconnected to international finance or international shipping or insurance or who knows what. And all of a sudden, there's 25 couples that were going to buy a house this year in your area that are no longer going to buy a house in your area this year. It might be a year or two before they come back into the market, which will affect your bottom line by maybe 5 to 30%. And you'll just say, oh, it's a slow year this year. We're down this year. But the cause of what's causing your slowdown, you might not realize where it really came from. And it's this interconnectivity of the marketplace. Complicated world in which we live, and it will not get less complicated. I can see why businesses do not have all their eggs in one basket anymore. It would be suicide for Ford to have everything in Detroit, in Dearborn, and within 300 miles of Dearborn, have everything they've got in that region. It would be suicide. They could be crushed by outside competition. They could be crushed by one highway, a bridge on a highway falling off could create supply problems for Ford's 5 plants, causing layoffs to 50,000 people for 2 weeks before a makeshift connection is redone. Parts problems, raw materials issues, just endless. With Ford having worldwide operations, and GM and what used to be Chrysler being global, they can 20% of their company is Dearborn has Dearborn issues, not 100%. 20% of their issues are European, not 60%. So much over here, so much over here. They can now ramp up production of part whatever in these plants through under license. If there's problems in there's problems in England for parts, no problem. We can get parts made in Romania by Romanian licensed factories. We got problems in Germany, no problem. We can replace those factories with factories in Shanghai or in China somewhere, or in Taiwan, or in other areas. Within days, weeks, we can send the plans. We can send the drafting documents and the engineering documents, along with people in private jets, to factories where they need to be at, and we can create production there for these parts that are not coming out of over here for the next 3 months because they got a strike or we got problems. And so axles, drivetrains, seats, glove boxes, sunscreens, rear view mirrors, whatever the parts are always available from multiple sources globally at the same time, anytime, on an emergency basis. And we keep those cars moving on the production line. We don't get stuck anymore. We're in the 50s, 60s, 70s. The entire production of General Motors would stop dead within a week. Not a truck would be made, not a pickup truck, not a sedan, nothing would be made at any GM plant because they were all interconnected between Canada and the USA, between 7 states in the US and maybe 2 provinces in Canada. The entire automotive business for all North American automotive production would stop dead in its tracks within a week and a half, 2 weeks. And then the dealerships numbers would drop and drop and drop. And the North American economy in the Northeast US would grind down to 50% activity. Those days are over and will never come back. Just so you know. There you go. There's my little rant today, a little history lesson for you. The market right now is down 161 on the Dow. It's a nothing burger. We're down 36 on the S&P. Ho-hum snorefest. NASDAQ is the loser today. 1.4% off today at 218 points. It's the FANG stocks. The FANG stocks seem to be the culprits today, but only for today. And that could end in an hour or 2 or 3. Because remember, the FANG stocks are the guys who have been making most of the profits, corporate profits. They've had some of the most incredible results the last several quarters. Apple reporting 43% increases in net earnings from the quarter a year ago to the quarter this year. Unthinkable, unheard of, unprecedented profit numbers. Never before seen in the history of mankind, of a company that large making that much more money the next year. It never happened before. And so for some of these stocks to pause a little bit and to pull back a tad, yeah, we've been kind of calling for a correction. And maybe what we're getting is a market correction in certain sectors only or certain stocks only. But I can tell you, folks, these corrections will not last long. We're talking about a correction lasting hours or days, not weeks or months like in the old days. And that is just because of the speed of the information that can flow between buyer and seller and observer. This world in which we live has gone into fast forward, mega fast forward. And it's good and bad because you can have a quick dip but you can also have a quick recovery. The rest of the market seems to be just going, well, what's going on over there? Oh, well, they're having their issues. Oh, yeah, well, that'll go away in a couple of days. And it does. Because at the end of the day, there is so much cash lying around to go into the market. They're looking for deals. And if Apple and Microsoft and Google and Amazon come on sale too far, too fast, their stocks will not only be scooped up by the companies themselves, which will always buy these stocks, but by institutions that are drowning in money. And they'll put more money into an Apple or a Microsoft. $20 off from what it was 3 weeks ago. Yeah, they'll put money into a Microsoft right now. No problem. And they'll hold it for 5 years or longer because a pension fund has a problem. The California Teachers Pension Fund, the Ontario, in Canada, the province of Ontario Teachers Pension Fund, the Nurses Pension Funds, and all of them, thousands of these funds that are huge, funded, unbelievable. They keep getting money delivered to them every 2 weeks. They keep getting cash coming in every 2 weeks. The deductions off the paychecks never stop. Have been coming in for 50, 60, 80 years, 100 years, will continue for hundreds of years, will keep coming in. Every month, the Ontario Teachers Pension Fund is sitting on millions more dollars. Not thousands, not hundreds of thousands. We're talking millions, if not tens of millions of fresh money coming in every month that must be invested because the province of Ontario is growing ever so slightly every year. More schools being built than torn down. More students in school than fewer, more teachers working than fewer. It's a slow, steady thing. The Canada Pension Fund, which represents Canadian public, Canadians, that's one of the world's largest pension funds. Every month, hundreds of millions of dollars coming in that must be invested and put to work. Because the pension fund has got to make a profit, has to grow beyond inflation to be able to pay the benefits to its retirees. And the boomers are retiring at record numbers because this is the bulge of people that were born from 45 to 55, 65 that are now entering retirement years. And there's payouts to be done. And so these funds have got to deliver. And they also have to deliver returns and grow the capital base for the wave after the boomers. And on it goes, on it goes. And so these funds are constantly looking for, where do I put my money? Where do I put money on behalf of the fund? And what they look for are sales. And when we see a sale like we have this morning, it's not a big one, but it's a sale. They'll take a look at, well, who's on sale the most? Oh, Apple is on sale. Microsoft looks to be, it might be on sale. Maybe we can buy some of these stocks at a bit of a dip here. We'll pick this stuff up, and we can afford to wait 10 years to get a profit out of this. Apple, in the meantime, as we speak right now, it pays a dividend. It's not a lot. It's a 0.61% yield, but at least Apple pays something. But the stock's at 143, down $2 from yesterday's close. The high of the year for Apple has been 157. It's 143. Yeah, it's a good buy. The company's buying its own stock. Pension funds will buy along with it, which again tempers the drop-off. There is so much cash that needs to be put to work globally that the stock market doesn't have enough stock for it. The stock market literally is not big enough for all the cash that's out there looking for a place to go. You would think it is, because if you're into it, you kind of go, well, the stock market's pretty big. Yeah, but it's not as big as the bond market. The bond market is much bigger. It might be 10, 20 times larger than the stock market in dollars. So the stock market is the junior partner. And you guys who are following me, where I'm talking about companies that used to be SPACs, we're talking about the newest entrants into the marketplace, who are the tiniest of companies that most institutions follow. There is more capital available to these entities than you can ever imagine. And this is why I say to you folks that if another buy recommendation comes out from a stock analyst on SoFi or Rocket Lab or Matterport or any of your favorites, the impact on the stocks will be profound, because there aren't enough shares to, in any way possibly, to handle the demand that could come in. We do not have stocks that we're following that have 5 billion shares of market cap. We're not dealing with stocks at $100 a share. We're talking about stocks that are trading from $3 or $4 a share, like ATIP, to 20 something dollars a share. We're talking really cheap paper and not much of it. And so just a little bit of an entry, a little bit of one institution just picking away at Matterport, one institution picking away at SoFi, one institutional investor picking away at ATIP or ME. Your shares could be up 40, 50% in a week without any fanfare, announcements. It'll just go up there because the demand will be way over the supply. That's what turns me on about the stocks that we're following here, because the companies that we're following are not in trouble with regard to higher oil prices. They're not in trouble with regard to China logistical problems. They're not going to get caught up in inflationary trade problems. No. The businesses that the 8 companies that I've found for you that they're in are immune to all the problems of following the market right now for a lot of other companies. And so this is where smart money is always on the hunt to go into places where they're not going to get nailed. They're not going to get caught in a vortex of problems. And these 8 little companies, as small as they are, will not attract Ontario Teacher Pension Fund money. No, these guys need a place where they can put $100 million in at a time. They're looking for big places to go to. We don't offer that. But the fire department pension fund for the city of New York, or the fireman pension fund for Cincinnati, or the policeman's pension fund for Columbus, Ohio, or the Calgary Public Employees Union in Calgary. Yeah, they've got pension funds worth 40 million, 60 million, $100 million, and they divide investments down into $500,000 units. And a lot of these, thousands of these, could be looking at any of our 8 stocks from time to time. And one of them might say, some of them will say, well, one of those 8 look pretty good. We like that satellite launcher, or we like that company that does those server farms, Sextera. We like that company, very conservative company, but they make money running 61 server farms for governments and for businesses. 2,300 clients is how many they have to handle their data. 2,300. Yeah, well, why don't we put $1 million into those guys? And a buyer comes in and nibbles up a bunch of stock and it's gone. And 2 days later, another pension fund out of Illinois comes in. And then 2 days later, there's a pension fund out of Florida. And then 2 days later, there's a pension fund out of Washington, Seattle. There's a pension fund out of Quebec. There's a pension fund out of British Columbia. European pension funds coming in are all picking up $500,000 worth of these stocks. Yeah, let's buy. I like that. I like that company that manages those satellites. That Spire Global. I like the idea of managing satellite data. Yeah, we should buy into that. This SoFi, this online banking thing. This is going to be big. It's going to be huge. They don't watch the NFL football games on weekends like you and I do. They don't get swayed to buy SoFi because they see an ad on CNBC. No. Their analysts are coming to them going, I have a list of 100 stocks that I think we should take a look at. They're based globally. 40 of them are North American. The rest are over here. One of those North American stocks that we like is called SoFi. I'll tell you what we like about the SoFi. And the room is filled with 15 people who have to vote on this thing. And of the 15, 5 of them go, I heard of these guys. Yeah, I've heard about these guys. Yeah. Tell me more. And now they come in with their deep due diligence and come out and say, we're about to get a bank charter. These guys at SoFi are about to become a full-blown investment bank. This is no longer a tiny little fintech investment trading on the on the market on Nasdaq. This is going to become a full-blown investment bank that could easily run to $30 a share and beyond. Could be a takeover target in the next 2 years because somebody larger is probably going to buy these guys to take over this whole thing. There could well be all kinds of meetings happening right now, have been going on and will still go on SoFi and all the others we follow, because they're not affected by oil prices. They're not affected by inflation spikes. They're not affected by supply chain interruptions. They're in their own business. Anyway, that's just me yapping away. Thank you for being here today. Thank you for joining me this morning. Those of you who are nervous about the market, I wouldn't be. This might be the day to buy back call options that you've written on certain stocks. This might be the day to buy put contracts, to write put contracts. This might be the day to take positions in puts. If some of your stocks back off enough, this could be the moment that you strike, because you're looking for down days to write puts. That's what you want. You want the biggest premium you can get from writing a put contract. Today is a day that you might look at scooping up calls. I noticed that on GameStop right now, we're only down $1.80 a share. The markets are all negative everywhere, and GameStop is down $1.80. Like, GameStop isn't the problem. So the stocks that we're following are not the troublemakers. Good news. So get ready, kids. We're going to get started here very shortly, and we'll see where it takes us. Thank you for those of you who joined me today and are hanging around here casually, listening and watching to what we're doing. I really appreciate that you're here. Please consider becoming a member of this channel if you're not a member already, because members have privileges, one of which is you can make comments to me and send me questions during market hours, which I'm happy to try to address for you. So if you have any questions about options you're writing or thinking of writing, or you've written and you're looking to buy back, or you're looking to ask me some questions about stocks you're following that we're following here, I'd love to look into that. I'm biased to answering member questions because members are the backbone of this channel. Without membership, this channel would not exist. And I thank all the members out there who are following us. I really appreciate your loyalty to this channel. It means a lot to me. We're nomads. My wife and I, my Jennifer Aniston lookalike wife and I, we are houseless, and we're in a top secret location right now in a hotel in Calgary, but not for much longer. We will be out of here in not too long a time frame, and we will be coming to you from California, and we'll fill you in on the details as they become available. And we're excited about what's coming up. We're going to head to warmer weather because it's starting to cool off up here. We're now into the 60s and 70s in Calgary, soon to be into the 40s and 50s for the high, because Calgary turns quickly, and we're heading south to stay away from that this year, and we're rather excited about the move. I've got the Dow now with 2 minutes to go before we open. The Dow down 113, down only 1/3%. S&P down 28, it's only down 0.63. NASDAQ now down only 184, down 1.2%. Still the loser of the day. Oil up 61 cents at $76. Apparently overnight in Europe, Brent crude, which is the price of oil for the European delivery, did briefly get to 80. They printed 80, but they couldn't hold it. And Europe has its own unique issues with oil and natural gas that North America doesn't have. North America is absolutely drowning in the stuff. The Mideast is drowning in its own oil. Storage facilities all over the world are full of oil. It's the getting it from storage facilities to refineries in an efficient manner seems to be the issue. And I think that what isn't being talked about at the moment that I will mention is the China demand for oil will not be anywhere near what it was expected to be. But at the moment, that's being ignored, and the price of oil is much higher than it should be, because I don't think the analysts are on the ball. They're not thinking. They're all excited about a cold winter. This is all the talk now. Cold winter will make oil go to $100 a barrel. Bunk, complete bunk. These guys are dreaming in Technicolor. They have no idea what they're talking about. They think they know, and you're right. If it's 40 below in New York City, yeah, you use more oil. It's not going to be 40 below in New York City. Sorry, it's not going to happen. It's not going to be 40 below in Toronto either, and that's in Canada. Not happening. Don't count on it. You are dreaming in Technicolor, and China without needing the amount of oil that they thought they need, and that will spill over to other regions in Asia. Other regions in Asia will not need the amount of oil that the oil promoters were counting on, but they're not admitting it. They're not talking about it. We'll see. We're clapping our hands right now. The markets are opening all over the place in North America. So why don't we find out how our stocks are doing to start the day? Stocks that we like to follow as our favorites. Let's see what's going on. Is there much happening? And what are the markets doing? I'm showing the Dow at the moment down 97 points. But again, these are the first few seconds of trading. We've got to give the market 10, 15 minutes to settle in and give us a real direction. But I'm showing the Dow down 97, S&P down 29, NASDAQ down 164. Kind of similar to what we were looking at coming into the end of the pre-market of the market. All right. Excuse me. Let me double check now. See if I can get another update here. I'm still showing the Dow down 97. I've got S&P down 29. I got NASDAQ down 164. Oil up 75 cents. Rocket Lab right now up a dime at 1442. I'm showing volume on Rocket Lab of 106,000 shares, now trading at 1459, up 27 cents. So Rocket Lab is bucking the market complete. Just seeing a headline, Goldman Sachs just slashed its China growth forecast to 0. Goldman Sachs calling China's growth curve 0. This is the lowest I've seen from anybody. I have been noticing downgrades for the China GDP numbers, but from 8 to 6%, or from 7.5 to 5.5%. But this is the first time I've seen anything like this with a 0 forecast for growth in China. That is severe, and is rather interesting to see that. Rocket Lab now 1451, 1456, up 24 cents. SoFi down 12 cents at 1758 on 1.2 million. We've got GameStop at 188.23, down $1.25 on 46,000 shares. It is not leading the downcharge at all. Matterport at 2051, down 36 cents. It was as low as 2025 already. It's bounced back. We're down 36 cents on 108,000 shares. 23andMe down 19 cents to 854, volume of 35,000 shares. Not much going on at the moment. SmartRent is at the moment not trading, is waiting for the opening there. Spire is down 9 or 10 cents, was as low as 13.77. It's now 13.94. It's bouncing back up, down only a dime on 6,500 shares, where there's no volume. There is no volume on the sell side. That tells me if this is the case across the board on the big boards, these down markets are not going to last long. Spire down 11 cents at 13.93. Let's move on. Spire, we moved on to there. ATIP 391, down 5 cents on 6,000 shares. Sextera down 18 cents, 926 on 1,700 shares. We got nothing going on, kids. We have AMC down 67 cents, Robinhood down 50, Vanek Vectors down 496. That would be because of Taiwan Semiconductor and other foreign-based chip manufacturers, especially China-based. We're watching for that. Of course, that's a bargain here. The lower these go, the better they get. Home Depot down $1.77. IBM up 43 cents to 138.99. The Dow now showing a 139 drop on the morning at this point in time. Now 152. The Dow's down 152. Microsoft down 459 to 289.58. This stock was 305 a week ago. Now 289. So we're off $16 a share on Microsoft. It had a great run from the mid 200s all the way to 305. Kind of expect a recovery, a retrenchment into the 280s. We're getting it. Don't know how long it'll stay here though. Apple 143.27, down only $2 with all the so-called downdraft. down only $2. Tesla down $2.50 to $7.88. It's still holding around 800. Bed Bath & Beyond down 67 cents. BlackBerry down 12 cents. Royal Caribbean up $1.19 to 93.60. The company is losing $5 a quarter, $20 a share right now. It's trading at almost 3 times book value. You take all of its value, it's trading at triple book value, way too high. $20 billion in debt is what Royal Caribbean is carrying right now. $20 billion in debt for Royal Caribbean at an average of 6%, 7% interest. We're talking about $14 million a year, $140 million a year in interest. That's over $10 million a month in interest they have to pay on their money, which before they can earn any profits after all their expenses, they have to add that onto the top of their expense line. They're not going to make money this year or next year. Not a chance. Just saying. Goldman Sachs up $4, 403.76. Going higher. Why? Perceived higher interest rates. More need for capital. Investment bankers are going to do very well. Goldman Sachs is run very well, trading at 7.4 times earnings. They should be trading at 14 times earnings. So it should be double this price. That would put them at 800. I figure they're just a $700 stock a year from now. So I'm cutting it a break. Unbelievable. Cheap. There's opportunities knocking on Goldman. They were 170. They were 372. Wasn't it 372 like a week and a half ago? Something like that. Unbelievable. Okay, back to the top here. Rocket Lab up 59 cents to $14.91. Again, pushing the $15 level around. 210,000 volume, very little volume, and a nice snappy move here on Rocket Lab. SoFi down 22, GameStop down 1 penny, Matterport down 43, 23andMe down 14 cents. Spire up 21, it's gone positive too, and ATIP down only 6, Cyxtera only down 13. So we have pennies and losses, and some gains here starting to show up as we're waiting for the opening to kind of work its way through. I see now the Dow improving dramatically. We're still down, but only down 112. We've just come back about 50 points in 3 minutes, if that. S&P still down 35, and NASDAQ down 204 points. But the Dow's only down 1/3 of a percentage point. It's a nothing burger here, folks. The Dow could go positive later this morning the way this is going. S&P down 0.85%, NASDAQ down 1.3%, and that's because of the high flyers. That's all it's doing. Let me double check something on the high flyers. Speaking of high flyers, IBM up 63 cents, as I said. Microsoft down 5.80, Apple down $2. Here we go. Amazon down $59, Facebook down 7, Alphabet, which is Google, down 58. There are your FANG stocks that are taking it on the chin today. They're the ones losing the most, but they're the ones that can recover the quickest. Even Netflix, it's up 429 to 596. So Netflix is not joining the FANG sell-off at all. So that's what we got here. I just don't see an ugly market rout happening at all. Spire moving, that would be fine with me. We got Spire now, only down 8 cents coming on. Rocket Lab 1504, up 69.72 cents here. Rocket Lab has broken the $15 level. SoFi down only 24 cents now. GameStop down 69 cents. Matterport down 61. 23andMe down 16. Spire down only 4 cents, back to $14. ATIP now only down 4 cents, and Cyxtera down 11. So there's a few opportunities to buy some contracts back if you've written some. There's a couple opportunities here to get some calls, but there might be a few opportunities to write some puts, but not many on the 8 that we follow very closely. Plus GameStop is number 9. Welcome. Nice to have you here. Spire is alive, they say. I like that. Larry is smiling. Way to go, bud. How you doing, man? Spire just shot up. 14.11 right now on your Spire. 15.04 on Rocket Lab. We've got Spire now showing a gain of 7 cents. 142,000 shares on volume. You know how Spire works. Those of you who follow this stock, you know that Spire can move up $2 in 15 minutes like nothing. And it's looking good this morning. We're happy about that. Apparently, Spire Global and now reports a new partnership with Space Chain. No terms disclosed. That's from the Business Wire. Very good. Uncle Bruce, thank you for the real talk insight this AM. It's solid. Spire bouncing around like crazy. Uncle Bruce, if I have 10 calls that expire in January, does that mean I can write covered calls against those calls? Or can I only write based on the number of shares I have? If you have, I believe the way it works, this is my interpretation of it. Each brokerage house is different, though. I'm going to predicate this answer by saying, check with your broker. But if you own call contracts that are in the money and they're January's, you can write calls against those calls on higher priced calls. So let's say you've got Matterport 15s. Just I'll pick something. You got Matterport $15 calls. You can write a Matterport $20 call that expires before January's calls. So again, you can't write next year March calls against the January's because they expire first. So if you have January 15s, you can write October 15s or 17s or 20s. You can write November's or December's, whatever's available. You can do some short-term writing if you so desire. Yes, the answer is yes. I believe it is. Now, check with your broker because they might say, yes, you can do that, but you have to have a margin account. You might not have a margin account. Yes, you can do that, but your account has to be worth at least $5,000 or $8,000 or $10,000. I don't know. You check with your broker. But yes, check it out. All right, there you go. I hope that helped you. January $315 Microsoft call for $500. Break even $320. Any good or no good? January Microsoft 315s. The stock now $285, $288. $27 away, $5 value. It's expensive-ish, but not-ish because the stock, you're talking about a $500 scenario here, $5 per share on a $315 stock. We're in kind of a middle ground right here. If this were 2 months ago, and everything was equal, we were all here with the pricing stuff, you'd have 6 months of time. Right now, you're down to 4 months of time. So for 4 months, you're paying $1.25 a month in premium, just so you know. Now, having said that, the stock is down $5.36 today. If this contract is backed off $2 or $3, might be the move. It might be an okay move. You gotta be a real, I want to use a word, but I can't because I'm trying to be PG rated here. Starts with the letter P. And if you're walking near cacti in the desert, you accidentally bump into a cactus, you get a P on your finger, and it really hurts. That's the word I'm looking for. You need to be that kind of a person when you are buying a call contract. You've got to be ruthless. You cannot pay the ask price on the contract. You have got to be sometimes willing to not get it by putting in a bid that's comfortable to you. And I hope I'm making myself clear here. If the I'm just punching in the quote, by the way. If the contract is say a 480 to 5 or 460 to 5, don't pay 5. Offer bid 465, a nickel higher than the bidder, and be a P about it, and just sit there and say that's all I'm prepared to pay. If somebody wants out, you got to sell it to me. I'm not coming to you. You got to come to me. You got to play that. You got to be like that when you buy a contract like this, because you're talking about a lack of time, and you don't have 7-8 months. You have 4, and you don't want to overpay. And sometimes the difference between a deal and not a deal is 20-30 cents. I'm sorry to sound so picky about it, but sometimes you paying $480 or $460 is the make or break between paying that and $500. Just saying, because you make your money when you buy, and you're going to lock in your profit when you sell. And if you spend 30 cents less to get it and get 30 more cents when you sell it because you're being a P on the other end, that's 60 cents. That's $60 a contract. And That's a lot of money on a $500 deal. That's 10, 11, 12% on your money to you versus to somebody else. You got to be a P about it, okay? Just trying to be PG rated. Okay, so let me take a look at the market here. You're talking about buying a 315 call, aren't you? All right, so you're way out of the money ish, and we're showing a 315 call for 500 buckaroos January. I don't see it at that price. Am I missing something? January 21st, Microsoft 315 call. I'm showing 645 to 660, last at 660, down a buck 58. I'm showing 320s at 510 to 525. But not 315. So recalibrate, keep an eye open. It is a $500 buy. I mean, it's it's $5 a share. But you need the stock to come. The stock's coming down to you, so that's great. But you want to be as close to the money as possible with as much time as possible. So there's the conundrum as we have it. But at the moment, I'm still showing, unless I'm missing something, I'm showing 645 bid on that contract. So yeah, if you could get that contract for 5, sure. But it looks like it's the 320 that you might bid 5 for. And if you were trying to buy the 320, which is showing 510 to 525, I wouldn't bid $5 for it. I'd bid 505 for it. That's what I would bid. If that's what you're allowed to do. If you have to go in dimes, I don't think you do have to go in dimes. You can go in nickels. So I'd bid 505 for the 320. Or I would bid 505 for the 315 and see if it just comes to you. Maybe the stock drops another $2. The contract loses a quick dollar or so, and you get hit for a buy, and you get it. Again, be a P about it. Be a peach. Yeah, be a peach. Be a peach about it, and be patient, and be deliberate, and just say, this is the price I'm prepared to pay. You give it to me at this price, I'll buy it. Otherwise, forget about it. I'll go somewhere else. There's lots of other deals. I don't have to take this one. Because you're prepared to pay $500+ for a contract that is out of the money, $30 in 4 months. I mean, you're still pushing it, okay? I'm hoping that in the next month, the shares come back to the 295, 300 range, and you go from $5 to 657. And that's your worst trade. You get out because after a month, it's just not going any higher. You make 20, 30% in your money, and you say, okay, I'll take that. Because you were mean, you were being a peach when you bought it, and now you can be a peach on your sell side. And you can score $1.50 or $2 because it didn't work out, and you still made money. That's what I'm looking for. Trying to limit your mistakes, trying to limit your exposure. Okay. Hi, Bruce. What happened on Friday during Power Hour? Could a large purchase of a bunch of cheap expiring calls create a price change in the last hour? Not really. Not necessarily, because again, calls expiring in the last hour have no influence on the stock tomorrow, like on Monday. They only have an influence on the stock while they last. And if you're trying to read into a big move in the market because someone bought a bunch of calls in the last 45 minutes of their life, I don't think you're going to find anything useful there. No. So I don't see so. Don't think so. Uncle Bruce, how about translating that word into a language no one is using so we can translate it and it's still censored for the kids? My English isn't the best. Peach is a good word. Gotta be a prickly pear cactus. That's right. Gotta be a prickly pear cactus. That's right. There you go. You could be that kind of a buyer, a prickly pear cactus buyer. Now you're getting the drift. There it is. A cactus can hurt. He's got it right. Be a stone cold penguin. There you go. Millions of peaches for me. There you go. You gotta be a peach. A putz? No, a peach. A player? A poopy head? What's the word? Pope? I can think of all kinds of words. Yes. Bruce, what is the matter with Matterport? Down 15% from a few days ago. Is it just some profit take? Probably. Keep in mind that the stock had a relentless run through good and bad days last week. We had days where the Dow was awful. S&P was terrible, and the stock Matterport just kept performing. Sitting here at $20.08 right now, down 79 cents at this moment in time after hitting 1982 this morning. Now back to 2008 on 445,000 shares. This stock's doing great. I mean, it was $14 2 weeks ago, so it's doing fine. Would like to see it go higher, of course. Rocket Lab 1472, talking about going higher, up 41 cents a share. SoFi down 32, GameStop down 228. 23andMe down 24, SmartRent down 14, Spire down 29, ATIP down 4, Cyxtera down 26. That's where we're at right now. IBM is still now negative, down 41 cents. The Dow down 227 at the moment on this early morning market activity here. I get the market down, and the Dow down 227. I got S&P down 47, and I got NASDAQ down 254. The NASDAQ is the loser with a 1.7% loss today so far. But you and I know how quickly it can turn 100 points the other direction at any time. S&P down 48. It's 1.1% drop, and the Dow down 0.68 of a percentage point. That's all. There you have it. There are sensational stories in the marketplace right now, and I want to tell you something else about yesterday and today that you have to understand. And it's not your fault that you don't know this or don't realize this. It's not your fault. When I was 25 years old, 30 years old, news from ABC, NBC, CBS, CNN started in 1982 or 1980 or something like that. CNN had just started around 1980. Up until 1980, just before CNN began, news came from the newspapers, the Reuters of the world, the news, the news pools, the words are escaping me, but the major networks, the major print media, and at that time, the waning influence of teletype. That's how we got our news. And news departments were usually divisions of large networks. So you had CBS funding Walter Cronkite, the CBS Evening News. CBS Radio was all funded by the entertainment department. So Mary Tyler Moore was getting the ratings, and MASH was getting the ratings, and they were making the big money from advertising. And the dough went into CBS, the mother company, and it then had a budget for everything, including entertainment. Johnny Carson was making gazillions of dollars for NBC every day, Monday to Friday. And NBC and ABC and CBS, they had all these millions of dollars coming in from all of these divisions, all their entertainment, hundreds of millions. And a portion of that money went to the news division, and it was a money loser. CBS News and Walter Cronkite lost money for CBS, but CBS didn't care. CBS viewed their news division as their ticket to keeping their television license through the Federal Communications Commission. And politicians and the public and all other agencies expected companies that could reap millions of dollars in profits from the American public, Canadian public, any other public, by selling and advertising on fluff stuff like the Jack Benny Show, the Ed Sullivan Show, like soap operas during the day. All of these entities were allowed to be on the air, which was originally perceived to be a national service to the American people. They were allowed to sell ads and make money if they had a news division. And the news division was separate from the entertainment department. And the news department was hands off. The only influencer at CBS on the news division was the top guy running CBS, the top guy. His name at the moment escapes me. The chairman of the board.
And the chairman of the board made it quite clear that no one messed with Edward Murrow or eventually Walter Cronkite and his people. The CBS News was granted a huge amount of money to have bureaus around the world, and there was a team of reporters, or at least one reporter and a cameraman and a producer in Tokyo, and there was always one in Seoul, and there was always one in Cairo, and there was always one in Berlin, there was always one in London, there was one in Paris. They were everywhere. They were global, and they were full time, and they could afford satellite links to get 2-minute, 3-minute stories to Washington or New York, where the headquarters was for the news, to get the CBS Evening News to you and I through Walter Cronkite. And it cost the network money, millions. It cost them millions. There were ads on CBS Evening News with Walter Cronkite. There were ad breaks, but it didn't pay for CBS News. It subsidized a chunk of it, but the rest of the money came from the entertainment division. That changed in 1980 when CNN showed up. By the time CNN arrived, cable television had been created for you and I to now get 60 channels instead of 7 or 8. Then we got to 100 channels and so on. And that spawned a new business. And Ted Turner, smart guy, figured out, hey, I can launch a news service 24 hours a day. And I can launch it out of Atlanta. I don't even have to launch it in New York, where it's really expensive to set up space, because studio space in New York and Manhattan is a fortune. I can set up in little old Atlanta, and I can operate a news department for a lot cheaper than CBS and ABC and NBC can, and I can be on 24 hours a day. So if there's a breaking story at 2 in the afternoon, I'm on it. This is great. Where CBS has to wait until 6 o'clock tonight or 6:30, whenever the national news started. And that began the whole evolution of the news business. And CNN came out as a money loser at the beginning. Ted Turner put millions into it to lose money for sure to start. But his game plan was a long-term game plan. He was going to build viewership and a following for his key anchors that were behind the camera every 2 hours or so. And sure enough, when the space shuttle blew up, the only network covering it live, CNN. When Ronald Reagan got shot, CNN had coverage of the Ronald Reagan assassination 24/7 for 4 days in a row. I mean, no one else would do that. So America wants to know what's happening with Ronald Reagan. You went to CNN. You want to know what's happening with the space shuttle? You went to CNN. And on it went. Every time there was a big announcement or big news or big development, CNN is where you went. Then Fox News came out, then other agencies came out, and it became a money-making business. But at the cost and the demise of CBS Evening News, NBC, and ABC, the three dominant networks, their news divisions just pulled back, and they got annihilated. But what did NBC do? They came up with MSNBC. They came up with their cable news division, cheaper to run, cheaper budget. And they were sharing video with their mothership and so on. And so everyone figured out a way to bring the news to you cheaper. And that's what we got into. And so now the news business is a money-making business. And so today's world is in a different era from where I came from. And in the 60s, if there was an interruption in your television schedule at 3 in the afternoon on a Wednesday, if CBS News cut in at 3 o'clock or 3:05 or 2:42, they cut in with a bulletin, everybody stopped what they were doing and would look at the television. Because a news bulletin that came out of CBS News or ABC News or NBC News at 2:42 on a Tuesday afternoon, something really serious is going on. And the country would stop, listen, be a 2-minute thing, and then we would move on from there. And we would get updates as the news went on. Today, there's a bulletin on the news announcement every 30 seconds. You tune into CNN right now, I guarantee you, on the bottom of the screen right now, breaking news. There is no breaking news anymore. There's always news, but there's nothing breaking anymore. It's almost never happens. It's so infrequent, like it used to be infrequent, that when we hear it, we don't react to it anymore. And so things have completely changed out. So um, I want to give you that as a bit of a background. It's not your fault that you don't know this. If you're 35 years old, you were never in the world that I was in when the world stopped, when something big was announced, something major was happening, something really, really, earth shattering. Like when Kennedy, the President Kennedy, was assassinated in Dallas. We will never go through anything like that again. As far as shocking and as heart stopping and a moment. The last time it happened was almost the Reagan thing. When Reagan the guy attempted to assassinate Reagan. That was kind of one of the last times that happened. But that wasn't as big as the Kennedy thing. Because at that point, from the Kennedy moment, everything was black and white, of course, and there was no live coverage. The actual assassination attempt on Kennedy's life never aired on public television until 1974. It took 11 years for the American public to actually see the footage that killed the president. Only still images were released. The Reagan thing, within an hour, they had the cameras that were there filming it. Now it's all live. Now we expect live everything. It's absolutely unbelievable. Thank you, Alberto. How dare I preach the truth? Thank you for your donation. So those of you who are less than 40, 45 years old, even 40-year-olds, you've never lived in my world that I lived in at that time. And there were times in my world where, again, in the brokerage business, we had the teletype machine in our office. That was our CNN. That was our live link to the outside world. It separated my office from all the office towers all around me. I had news coming in from around the world through a teletype machine that just constantly spit out information. And you could always hear it in the background if you were a desk trader, if you were walking through the trading pit area. This machine was always going, and we'd have to change the ribbon on it like once a week because the ribbon would wear out. We had to change the roll of paper every day because the roll would be like 1,000 feet long. And we would have just strips and strips of paper from news announcements. And our brokers, between phone calls, just wanting to know what was going on, they would go to this machine and they would read what's coming out live, and then they would look at the reams of paper that had been coming out for hours. And everybody in the office all chipped in that when you went to the teletype machine, there might be 40 feet of paper behind it that has come out. News has come out. And what you do is you go to the beginning of the 40 feet and you start reading through it, and every 8 feet or so, there's a pair of scissors on a string. You would cut 8 feet off the paper, and you'd read 8 feet more and cut 8 feet off, and now you got 2 of these in your hand, and you read more and you cut another one off until you caught up to the last 5-6 feet, and you have in your hand 8 strips of 8-foot paper, or 6 strips or 5 strips, and you would now attach them to a clipboard that's hanging on the wall. And we would have 4 clipboards, and each clipboard could hold about a pound of paper, half a pound of paper, and it would be like an inch thick. And so once the clipboard got too thick, we would put the next batch on the next clipboard and just keep adding to it. So some brokers would come out of their office and grab a clipboard from an hour ago, and they would stand over to the side and they would go through 8-foot sections of news announcements, and it would be everything. It would cover the Dow update, the S&P 500 update, bond yields, news from Germany, news from Britain, news from Tokyo, actual news, national news that was breaking, that you knew would be on Walter Cronkite tonight. You'd see stories. Oh, they're gonna do that one tonight. They're gonna talk about that. But this machine, on occasion, would be spitting out information. No one would be around it. It would just be spitting away. We'd all be working in our offices, and we would hear the bell ring on this machine, and it was like an alarm bell. And if there's only one ting, one bell went off, bing, went off one time, that would usually be a stock market update. It might be like every 15 minutes, the Dow is up or down, whatever, it's up or down, the S&P and the NASDAQ. If it was 2 bings, bing, bing, that would be maybe an announcement from the Fed. Interest rate, setting of interest rates for this week. Might be a government agency releasing inflation data, unemployment report, something like that. A three banger, bing, 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 three bells. That would be a serious announcement. That might be something like the Senate voted down a funding bill, something like that. Or it could have an effect on the markets, like an effect on the markets. It could be Goldman Sachs downgrades IBM to neutral from buy. That would be a big thing for us. That would be huge. General Motors, strike called by the UAW against General Motors for this Friday. Like the contract discussions broke down, 80,000 workers walking off the job Friday. That would be a big deal. Four bells, everybody in the office would get up. Everybody. And whoever wasn't on the phone would go to the machine right away. And everyone else would expect the person who got there to read aloud to the office what the hell's going on. That's how serious that would be. And a five bangers were rare. They almost never have. People would say to themselves, hang on one second, I'll be right back. And they put the phone down on their desk and walk to the machine. That's how important five bangers were. And that would be an assassination attempt on Ronald Reagan's life, or the shuttle blew up, launching astronauts into space. Like something really big, like the president of Egypt, Anwar Sadat, was assassinated watching a military parade by a group of terrorists. This would be world-affecting news. And everybody in the office would stop. The office would go silent when someone would get to that machine and read aloud what the hell's going on. And then we'd be on our telephones telling our clients what the hell's happening. Breaking news. And after the five banger, a minute later, there might be another five banger, an update. And then another five banger, 2 minutes later, another update. Because the news would just keep coming in, keep the latest. This is how we did it in the 70s and the 80s. It was as instant as it could be. It was as instant as it existed. No pictures, no video, just words. And we had to paint a picture from this. At the same time, we were watching our quote machines, and we're watching our ticker going across. We had a wall with a ticker on it. And we're looking at quotes, and we're seeing what stocks could be the most affected by whatever news is breaking at this point in time, whether it's company specific, region specific, political specific, human tragedy specific. We were always reacting. This is how we used to do it. Now today, I'm reacting to you with what's happening here on the markets. And you have the luxury of looking what's happening in the markets yourselves, lives, on your handheld phones, on your laptops, on your big ass iPads, whatever you're using. But what you don't get is you don't get the severity of the news anymore. You just get news. It's constantly coming at you, but you may or may not have an idea how profound the news is that you're getting. And you're not going to get a phone call from a guy like me, who's your stockbroker, who's going to call you at your office, and I'm going to get your assistant. I'll get the receptionist who will get the assistant to you. And I know who your assistant is. Your assistant is Dorothy. Dorothy is your secretary or assistant, or whatever it might be. And in the day that I was a broker, I was trying to reach my male clients because I didn't have female clients in 1978, 79, 80, 81. It was pretty well the domination of the male. So I'm talking to the assistants, and I'll say to Dorothy, "It's Bruce here. I need to talk to Jerry right now." Now, she knows that I would never do that unless something really important is going on. And if I ever did that and talked to Jerry and gave him some fluffy news, he'd hang up the phone on me after our call, and he would tell Dorothy, "Don't ever do that to me again. Don't ever let Bruce do that, because he's just bothering me with crap." Because certain brokers were doing that, and so they would never get to their clients. They would always leave messages. When I would call for somebody and a five banger was going off on my machine, I knew that this guy had to know this news now. And I knew that he would want me to get him this news now. No matter whether it was in a meeting with his boss or in a meeting with his assistants or his team or whatever he was doing, whether he was on another call, it didn't matter. Dorothy would walk into his office, knock the door, walk in. He'd look up, go, "Why are you bothering me?" And she'd say, "Bruce is on the phone. He needs to talk to you." This guy would tell his whatever, live people, "Hang on one sec." He'd pick up the phone, or he'd have a call on the go. He'd put him on hold, and he would grab my line. He'd say, "What's up?" And I would give him the news, the 5-banger news: assassination attempt on Ronald Reagan. And the guy go, "Oh, gee, Jesus," he'd be blown away. "Thanks for letting me know. What do you think is going to happen?" I'd give him a quick synopsis. "I'll get back to you." Now the guy knows I'm on it for him and my clients. This guy now is a news source. His secretary is probably still listening. "What happened? What happened?" "Assassination attempt on Ronald Reagan was just had." The office would now know. That office would now know because the secretary would tell the office. That's how fast we were. We were the cutting edge. If we were on the ball, we were the cutting edge of news. And so our clients came to depend on us for every second of the day update on anything really important. But a call like this, I might make only once in a year, once every 2 years. It wouldn't be a weekly thing. Today, you're looking at the quote machine, you're looking at CNN, you're watching marketwatch.com, whatever you're watching and following, you're being told what's being told to you now is the most important news of your lifetime, and it's all BS. It is not important. It is just more news that I used to disseminate on your behalf, and I would keep you away from fluff information that you didn't have to bother. So you could do your job. You could do your work with your clientele. This is how brokers used to get paid. When I would see a client in person at maybe a charity event in town or something like that, and I'd see a couple of my clients in person, they would come up to me and we'd have a deep conversation because they knew I have their back. I got their back, always. They could always count on me to give it to them straight. Tell me what this means to my account. Is this going to affect my retirement plan? Is this going to affect my 401k, RRSP in Canada? Is it going to affect my children's savings accounts? Is this going to affect my company, the company I work with? It might be the president of the company. This might be a VP. This might be just a lowly executive 15 rungs down, wants to know, is this going to affect the division I'm in my company? This kind of news that you're bringing me, whether it's an oil price collapse in Kuwait, whether it's an invasion by Saddam Hussein into the Gulf countries, whatever the announcement was that I was bringing to these clients, they'd want to know. And they knew that I could give them the goods. And so you see announcements coming out, you see developments taking place. Today, you have to be your own judge of how serious this is. And so I'm telling you what the markets are doing. And sure, right now, at this moment in time, the Dow is lower than this morning. We're down 360 points right now. We're down 1% on the day. It's a nothing burger. It sounds terrible. $300 drop on the Dow. Looks awful. Yeah, it looks awful. It's not. It's 300 points on a 34,000 point index. S&P down 1.45%, down 64 points. And we're down 2% on NASDAQ, 309 point drop on NASDAQ. Not the end of the world. And there is no one economic area of the economy that's collapsing. Nothing like it. The economy is suffering from a kind of a heartburn problem, I think. The older you get, you understand what I'm talking about. You eat some food that you love, and an hour later you're dealing with heartburn. But you're not going to stop eating this stuff. You're going to try to digest it. The economy of the world, the G20 economies that matter, we have a problem. We have customers that want goods and services that can't get them at the time they want them, as quickly as they want them, in the way they want them. They have the money to pay for it, which is not the problem. It used to be a money problem. It's not a money problem. It's a delivery problem. These are one-offs. And these are short-term, and they're going to rotate. And that's the problem with these supply chain problems. They're going to keep rotating on us. So this week, I'm going to talk about, we have problems with oil and gas in China because Chinese factories aren't running at 100%. Next week, I'm going to talk to you about computer chips with Ford F-150s. The next week, I'm going to talk to you about supply chain problems out of Bangladesh to get clothing to the North American clothing shelving in time for Christmas. It's a rotating series of crap. Not one of these stories is earth-shattering, recession-causing, life-altering anything. It's just part of the world in which we now live. And you can deny and you can poo-poo all of the crap that's going on out there regarding the virus, the vaccines. You can completely completely poo-poo it and don't take it seriously and believe it's all made up, all you want. But at the end of the day, there is no denying that in every person's case across the world, they have experienced issues with regards to supply chain problems. They've seen it, they've heard about it, they know about it, they see it firsthand themselves. And we keep hearing about it, and it's not made up. It's the real deal. And when it affects your retirement account, you know it's real because your stocks are down. Certain stocks you follow, or certain sectors you follow, certain investments you have, maybe in ETFs or mutual funds, or relatives you have that are into certain investment, they're off. Their investments are off, and you know the answer. They may not believe you when you tell them what the answer is as to why their investments are off, because they don't believe in the big conspiracy theory nonsense or whatever. Fair enough. It's just the way it is. But there you have it. There's the story, and there's where we're at. We're in a unique time, and we're very lucky. We're very fortunate to be in the time we're in a way, because it's an instantaneous, connected world globally. It's the most incredible thing. Jen and I are looking to go to California next week to spend the winter down there, and I will be just as connected there as I was in my home in Creston, where I had high-speed internet. Just as connected as I am here with this internet. It might not be as good as that internet, but it's still pretty good. I'll be down there with high-speed internet and still be on top of what's going on. That's how sophisticated the world is. 40 years ago, 50 years ago, my mom and dad took my sisters and I on a holiday for 6 weeks in a van from Southern Ontario to Florida. The big 6-week trip that was the biggest trip our family ever took when I was in as a child, as a family. That was the biggest trip we ever took as a family. And I was 13, 14 maybe. And for hours we were out of touch because there were hours where Dad's radio in his car had got nothing, no signal from any station anywhere. Had no idea what was going on until we got to another big town, and then had to listen to the town's radio station. Got to a big city, you could at least listen to national telecasts. Got into the hotel that night, you could turn the TV on, and then Dad would want to watch news, see what happened while he was driving the car with the kids for 8 hours today. Today it's all satellite radio in your car. Listen to anything you want. You can listen to television in your car. Unbelievable. You can listen to me. Unbelievable. What a world in which we live. Welcome to the new order. It's unbelievable. Ashley, thank you for becoming a new member of this channel or renewing your membership. I love you. Thank you so much. And also thank you for this donation. Happy going off on a tangent day, Bruce. Thank you. Doing what I can. Sometimes we have to go. There are days where I have to kind of go back in time with you guys to kind of show you where you're at, where we're at. By the way, W, thank you for becoming a member. Love you. There are times where I need to remind you where we've come from in such a short period of time. The next 15 years will be unbelievable. I suspect strongly that our watches, will be our computers. I suspect strongly that we'll have wireless communication from our wristwatches or phones to our ears constantly. We'll have wireless video here. We'll be able to watch and see headlines going through here. Hopefully we won't be driving with these on while we're doing it. Probably driving remotely anyway, all by remote control. But the changes are profound. It's happening at light speed. The new economy is going to continue to be another new economy. There's going to be a rollover of the economy again and again and again, and we're going to say goodbye to certain companies and certain products as they phase out of our lives. I remember watching a movie talking about how the world had changed, and there was a guy who was I think it was Danny DeVito. I think it was Danny DeVito talking about wanting to take over a company and changing it around. And he was talking about how back in the early 1900s, there were dozens of companies in London, England, and New York that were specialists in making buggy whips, because you needed whips to whip horses to get them to go, whether you were moving people or goods. And then slow but sure, the cars came out, and slow but sure, the buggy whip operators disappeared. And they became truck drivers, and they became delivery drivers and cab drivers, and they just evolved into different people. And eventually, there was only one buggy whip company left in business that made the world's best buggy whips, because the best run company was the only one left that could survive the business. But the problem was, even they went out of business because there were no more buggy whips to be whipped anymore. No more horses to be whipped behind buggies, in front of buggies. And that's the changing of the world. And so here we are today. I'm talking to you about radio in 1962, telling the world that Kennedy was assassinated. And Walter Cronkite going on television that had never been done before, doing a live breaking news update. I think it was the third bulletin that Cronkite did, was the first one to be on camera. The first two were voice only on CBS television. He was doing voice only breaking news. All you saw was a CBS logo, and you heard his voice. You heard the voice, you knew that's Walter Cronkite. The third bulletin he made, which was like an hour after the first one or whatever the timing was, he was on camera. They had rolled a camera into the office and turned it on. It took 20 minutes to warm up with all the tubes in it, to turn this camera on, and then get the control room to figure out to turn on all their switches, to then have him talk from his desk with his shirt sleeves rolled up, no jacket, to America about President Kennedy and the attempted assassination attempt on his life. And then he announced to the country a short while later that the president was dead. That's the first time we saw that, 1963. Thereafter, after that day, there was always a camera on. A camera was on at all times in the CBS News studios, always on, because they took 20 minutes to turn on. Way back when. In the 70s, they had transistors. It was instant on. Within 10 seconds, the camera was on. But back then, you had to warm up all those tubes, and they were big tubes, and they were expensive tubes. To keep a camera on was a fortune, because the tubes only lasted so many days or weeks, and then had to be replaced at the cost of thousands of dollars each. To keep a camera on was a big deal. But that changed the world in 63. Today, we get news reports now on our television sets, on our internet, from people holding iPhones. The iPhones are today's cameras that networks use in many cases to deliver breaking news from Afghanistan or from Tokyo or China, wherever it might be. It's unbelievable. The world has changed out. So those big tube TVs are now museum pieces. The tubes themselves are museum pieces. To find one that hadn't burned out is an unbelievable find, because they aren't made anymore. Just like buggy whips, they don't make them anymore. So yeah, welcome to the changing world in which we live, and as we try to update each other on what's really going on. I remember being on a bus in 2009, coming back from a football game at night we just won. My friend pulled out his phone and started live streaming NFL Network. It was so bad that we were blown away. We were just blown away that we could watch this in a bus driving back from a home game. It's unbelievable. Yeah, amazing. Yes, I see Agino saying, I see some sort of computerized sunglasses in which you'll see notations and news in your lenses. As someone who needs glasses, I look forward to that. I see the day where people will get contact lenses. We'll put contacts in, and those are connected wirelessly to news services. And we will be able to, I'm not sure how to activate them, because that technology will come, where we'll be sitting in the subway, and one eye, we're looking to watch what's going on in the world. The other eye, we're reading the news headlines or watching video, literally watching video live, what's happening out there while we're just driving, rolling along the subway. And the brains of this machine are in our wristwatch on our watch, or it's on a necklace around our necks, underneath our shirt that no one sees. And so no one knows around you that you have you're receiving information that you're watching on your contact lenses about the outside world as you're rolling along in the subway or the train or whatever you're doing. It's coming. It's coming. It's just the future. I won't be around to be around with you for it, but it's coming. Yeah, it's unbelievable. Anyway, what can I say? Thank you everybody for being here. We're up 15 cents right now on Rocket Lab to 1447. We're down 434 points on the Dow as we continue to slump off at the moment, down 1.25 points. S&P down 74 points, down 1.6%. NASDAQ down 2.25% to 330, down 337 points. The only winner I see right now is Rocket Lab up 23 cents. I see Spire up a penny. I see Robinhood up 2 pennies. And all my other greenies have disappeared. I see Royal Caribbean up 25 cents, which makes me laugh. I'm seeing unchanged on American Airlines, 2-cent gain on AT&T, and a 124 gain on Electric. What is that? Electric Arts. Electronic Arts is up $1.24 a share. Almost no green at all. I mean, it's just red everywhere. So we got this morning. Jen is up and about, or up and about, as we say in Canada. And welcome, Jen. How are you? Do you remember the five? You remember the 5 bells going off on the ticker tape machine in the office?
It was always something, or even 3 bells.
3 bells.
Normally it was just a
1 or 2. Yeah, 1 or 2. But 3s, 4s, 5s.
Yeah, you knew something had happened.
Something big is going on.
And something big happened 49 years ago today.
What year is this?
YA is coming down the wing. He passes it to Henderson, who misses.
Made a wild stab.
He comes around, gets it again.
Esposito gets it, shoots it at the net. Henderson is there. He shoots. He scores.
Henderson scores. Canada beats USSR. 49 years ago.
For my American friends that are NFL fans and couldn't give a crap about hockey, let alone Canadian hockey history. That was probably the most defining moment in hockey history in this country.
Yeah.
Where this country stopped dead in its tracks.
Moment for Canada.
Yeah. Henderson scores the winning goal with 33 seconds left in Game 8 of an 8-game exhibition hockey series. Had nothing to do with exhibition hockey whatsoever.
Yeah.
Had everything to do with those damn commie bastards and us. And Canada got the winning goal. Canada got the winning goal to win that game, which
out of
gave
sheer desperation.
Which gave Canada 4 wins, 3 losses, and a tie against these amateur hockey players from Russia that were like the Red Army amateurs. Yeah, some were amateurs. These guys were. And Canada won the last game in the last minute to win one more game than the Russians won to win the series.
Yeah.
But from that moment on, Canadians realized that we're not the only game in town anymore. We think the NHL is the pièce de résistance. You can forget about it. This world hockey thing is coming on big time. And even if we were to send a team to the Olympics, we probably wouldn't win the gold medal. Because the problem for us is to send a team to the Olympics would mean we'd need to keep guys together for a year to bond. We can't do that. We have NHL All-Stars that get together for 2 weeks to have a good time in Tokyo or wherever the Olympics are being held. The Soviet Union with the Red Army team practiced 6 days a week and got Sundays off maybe. And they practiced 6 to 12 hours a day all year round. They didn't take the summers off. They were on skates in the summer. Canadian hockey players, NHL hockey players in 72, they took the summer off and they went camping. They put a belly on drinking beer. They got to put on some weight, get ready for training camp and work it off. And the first month of the season was always a write-off anyway because you're just getting back into shape. Those days were over as of 1972. That was the end of that. Hockey changed forever.
That was 49 years ago today.
49 years ago today. September the 28th.
Yeah.
I remember that day. Never forget it. Oh
I
my
know.
gosh. Canada never forgot. Well, those of us alive who were old enough to remember have not forgotten it. The problem is, it was 49 years ago.
Yeah.
School teachers today in school were not alive when this happened. They have no personal connection to it.
Yeah.
They couldn't give a crap. They were never educated about it either. And so they can't teach the kids today about how important this day was in Canada's history. As a country, forget the game. The country emerged a different country after that moment in time.
And the fact that it came from Cornwall to Henderson.
A French Canadian. Well, it went Cornwall and then it went Esposito to Henderson. Those 3 guys were on one. So you had a French Canadian, Italian Canadian Esposito, and you had a Christian.
Yeah.
You had a Christian Canadian as Henderson, which didn't matter to any of us. They were
Yeah.
3 NHL hockey players from the Montreal
All wearing
Canadiens,
the Maple
the
Leafs.
Toronto Maple Leafs, and the Boston Bruins. We had an American team, 2 Canadian teams, and these guys scored the winning goal or
Yeah.
contributed to it in the last seconds of the game, and none of us gave a crap. All I remember was a week or two later, the Boston Bruins came to Montreal to play a regular season hockey game. And in Montreal, no team is hated more than the Boston Bruins. I mean, the Toronto Maple Leafs are hated, but Boston Bruins are despised. And the Bruins came into town to play a hockey game. It could have been Saturday night, don't know what day it was. And Esposito was interviewed years later saying it was the pregame. We were coming up with a pregame skate. And, we just kind of, shuffle around for 15 minutes and get the kinks out, shoot some pucks at the net. And Jerry Cheevers is in goal and we're shooting some pucks at him. He says, normally the rink is half full. And it's just people finding their seats and they're getting their popcorn and they're buying a beer and they're just come out for the pregame skate. It's packed. Couldn't find it. There were no empty seats. They were all standing ovation. But not for Montreal, for us. Because
For him.
on my team was Wayne Cashman,
Yeah.
team member of
Yeah.
Super Series, myself, and a couple other guys. We were all on Team Canada.
Yeah.
They were clapping at us, standing ovation, for the full 15-minute warm-up in Montreal. Are you out of your mind? Are you kidding me? He said, I was so nervous I couldn't shoot the puck. I was blown away. That's what it meant to Canada. Just having Phil Esposito show up in your ring.
And he had such a good first game. Remember the practice of the first game? He came out on from the boards.
Oh, that was in Russia.
Yeah.
But the first ever game in the series of the 8 was in Montreal. There were 4 games played in Canada, 4 games played in Moscow. They played Moscow, the same arena, all 4 games. Canada, they had 1 game in Montreal, 1 game in Toronto, 1 game in Winnipeg, 1 game in Vancouver. Then they took 2 weeks to gather themselves, get over to the other side, and then do 4 games in Moscow. The first game in Canada, 35 seconds into the game, Espo scores the first goal. Esposito in Montreal. The crowd went nuts. I mean, Esposito scoring for Canada the first goal. And about 3 minutes later, Canada scored a second goal. And they were up 2-0 in 3.5, 4 minutes.
And all was right in the world.
All the Canadians across the country and all the analysts were going, oh, well, okay, that it's not, this is going to be a cakewalk. This is just going to be a little old exhibition of 8 little old hockey games with these Russian amateurs. And Canada's already leading 2-0. In the meantime, over years and years, Henderson is sitting on the bench with Bobby Clark from the Philadelphia Flyers and Ronnie Ellis, Toronto Maple Leaf. And they're looking at each other and they're going, we're in trouble.
We're so dead.
We're up 2-0. We're leading 2-0. We're going to get our butts handed to us. These guys are unbelievable. We got lucky. A couple bounces. They were nervous too. The first 10 minutes, the Russians were nervous. We were nervous. We were all on adrenaline. We're up 2-0. At the end of the first period, it was 2-1 Canada. At the end of the second period, it was 4-2 Soviets. The end of the game was 7-3.
Yeah.
And the Russians just handed our lunch to us. And the boys were looking at each other going, oh, are we in big trouble? We are so out of shape. These guys are faster, more skilled, fearless. We're the tough guys. We're the intimidators. None of them are intimidated by us because they don't know who we are. Nobody knows that Bobby Clark can assassinate you in the corner. Nobody knew Wayne Cashman could tear you to shreds against the board.
They didn't play that game.
They didn't play that game, and they didn't put the puck there. They didn't put the puck there to play that game. They put the puck in the slot where they could out-stick handle you and pick the top corner if you gave them a split second to take the shot. The NHLers realized we're up against assassins. These guys are unbelievable. They're trained to kill us. They're trained to win as a team. They're a unit.
Yeah.
We're a bunch of all-stars.
We just happen to be Canadian.
Canada figured something out awful
And it was
fast.
the perfect metaphor for that first game in Russia. Here comes Esposito down the aisle to come out through the boards onto the ice, and what does he do?
Well, what happened was it was the pregame introductions. Every game of all 8 games, they had the guys line up on the blue line, facing each other, and everybody was introduced. Every single player
Yeah.
from both teams. Took 15 minutes. It was excruciating because the tension was building. But just drop the damn puck. But no, they had to do this, and so it was game number 1 in Russia. And Phil Esposito was the second or third guy mentioned because he's number 7. They did it by numerical sequence. And Phil Esposito skates forward 2 feet, 3 feet to just kind of acknowledge the crowd. And his skate blade caught a flower petal that had dropped because everybody had flowers they were giving to the other player. They were giving flowers to these guys. It was 1972. Forgive us. His skate blade caught the flower and he fell. He fell over.
Fell right on his face. It was awesome.
And it was on national live television around the world that he fell. And what does he do? He decides to get up on one knee only and pretend to bow, like a ballerina would bow to everybody at the end of a performance. He bows to everybody at the performance. Well, the mood lightened up incredibly because the tension at that moment was just unbearable. He was the third player introduced. And he falls over and he does this little stunt with the ballerina move. And then one of his players comes over to help him up, the old man, And everyone just lightened up. And then they picked up the piece of whatever that was. They picked it up and threw it away over the boards.
That followed him for the rest of his career.
And he was a hero because of it, because he was human. He made it a human thing. But the emotions were unbelievable. It was a real wake-up call for North America, for Canada. What a wake-up call, because we thought we were so superior. We're capitalists. We're superior to the Russians in every way, except our national game. What the hell is that all about? That can't be. It'd be.
And watching them at the Winter Olympics, 1988, in Calgary.
Yeah.
We went to all the hockey games. Like all the hockey games.
We went to every one of them.
And it was like the Russians were varsity and everybody else in the world was high school. They didn't even try. They didn't break a sweat.
They were
so good.
They did drop
It
passes
was unbelievable.
without looking. They would pass the puck behind them to a guy they knew it was there from training.
It's like Mahomes looking left and pitching right.
Yeah, like Mahomes looking left and pitching right.
Yeah.
It was
unbelievable.
It was a dissection. It was a human dissection in front of you every game they played. The first big game during the Calgary 1988 Olympics was the United States against the Russian team. Because in Lake Placid in 1980, the Americans had the Miracle on Ice.
Do you believe it?
The upset win against the Russians. The only game they played against the Russians was this game. And they luckily didn't have to play them a second time because the Russians the second time would have waxed them. But the Americans lucked out with a 5-4 win, I think it was. Yeah. Hung on for dear life to win that game. This game in Calgary, ABC Television had the rights to the Calgary Olympics. Paid $206 million for the rights to the games, which cost $200 million to put on.
But at good time zone, right? They knew they were going to get the viewership.
They got 8 o'clock Eastern time start time for this game. Absolutely. In a brand new hockey rink with perfect lighting and perfect camera display. Oh, it was perfectly made for American television, Canadian hockey television. Perfect. Yeah. And the Russians destroyed the Americans. I don't remember the score, but it wasn't close.
Yeah.
And it was over in 5 minutes.
They had a little grudge from Lake
It was over. Well, they already knocked them off in Sarajevo in 84.
That's right.
It was over in 5 minutes. The Americans had all the advantages. They had the Eastern time zone start time. They had the North American location. They had the fans in the stands that loved them. Yeah. They had all the emotion. All their parents and friends came up. Yeah. They had everything. And in 5 minutes, they were destroyed.
But the Russians,
because they were so good. The Russians were incredible. The Canadian team was a mix of college kids, minor leaguers, and about 4 NHLers.
Yeah.
And we were taken out in 5 minutes.
Oh, yeah.
The Russians won the gold medal in a walk. Yeah. In a walk. They didn't even play the USA or Canada for the gold. They played Sweden. And they beat them 4-1. It was a walk in the park.
And that's why the IOC went to the NHL and said,
"You guys got to come.
We have to have the best. We have to have the NHL. How can we do it?"
Well, we got to change the rules of the Olympics. Yeah. We're going to change the rules. Instead of making it amateurs, we're going to leave it as an open field, which means pro athletes can now play hockey,
which allowed
tennis,
the dream team,
golf, basketball, all the sports were now done by the professionals.
Yeah.
And why did they do that? For the TV ratings. Why did they do it for the TV ratings? The advertising money. Why did they do it? For the money. The money, Arthur, the money. Yes, the Olympics have gone commercial, and now we don't care anymore. We as a nation and as a world, we don't care so much. So it's not so surprising anymore. They're all professionals. The athletes you're watching on the Olympics, most of them in the key sports, are already millionaires. The rest of them are amateurs, and we don't watch that part. We don't watch the amateur stuff so much. We watch the pros. That's the world today. Anyway, I digress.
That's my fault.
Jen just took me off on another level. Michael is saying, I went to a Red Army exhibition game in the early 90s. There were some Rangers scratched, but they got destroyed. The Russians just didn't stop skating. It was crazy. That's right.
They never stopped skating.
In
They
Philadelphia,
never
that
stopped
same tour, they went to Philadelphia, and the Broad Street Bullies were in their prime back in the 70s, that one year,
Yeah.
and they did all the goon stuff. And the
That was
Russians,
embarrassing.
the second intermission, or second period with 4 minutes to go, the Russians walked out. They just left. And everyone thought, oh, we beat them. Well, no. The Russians walked out because the referees wouldn't make penalty calls against blatant headhunting moves that the Flyers were doing. Because, again, the Philadelphia Flyers were caught up in the emotion of the American people and looking for blood to kill communists. That's all it was. And they came back after a few minutes, and they promptly waxed. I think Philly won the game 3-2, but the Russians just went through the motions because they knew that this was a stacked game with NHL referees, and they just didn't bother competing because it wasn't fair. But it was in Canada. We were embarrassed. We were embarrassed because we knew that almost all the players for the Flyers were Canadians, and it was the Canadians doing the Americans' bidding in Philadelphia to goon up the game, and we were embarrassed. We were really ashamed of ourselves that we would allow Canadians to do this on national U.S. and Canadian television. It was pathetic. Pathetic. I would actually cheer for the Russians when they came over, because I knew they didn't have the equipment, they didn't have the support. They were given the dressing rooms with the heaters on instead of the air conditioning on. The showers didn't work. I mean, they tried all the dirty tricks to make it really lousy for these guys. And these guys would come over and just wax our butts because they were better. They were just better. And I would look at these Russians and going, when will the NHL hockey players train like these guys and play like these guys and put on skill shows like these guys? It took 10 years. It took to the 80s and the 90s until finally it became evident that the hockey game is improving in North America. The days of the 35-year-old veteran never being scratched because he's been a veteran for the team for 18 years. He deserves to play. Those days are over. The 38-year-olds got knocked out. The 33-year-olds got knocked out, replaced by the 22-year-old speedsters, skill kids. And once you hit 30, your days were numbered in the NHL because you weren't good enough anymore. The game has become that good. And you watch NHL hockey today versus NHL hockey on YouTube from the 70s, you can't recognize the game anymore. It's completely different.
At our Olympics, we had the German team was just treated like royalty by the German Canadian club.
The Austrians,
the
Hungarians.
We have so many of the European background.
The ethnic.
The Polish team.
Oh,
did they lost their equipment, or they didn't have much equipment to bring over? So the Polish Canadian club
did a fundraiser,
outfitted them all.
the Polish Canadian club and the Canadian Polish Canadian club, which was led by the group in Calgary. Yeah. They raised like 20 grand for these guys and bought them all brand new skates, new gloves, new sticks, helmets. They fitted them out, and then they housed them in their homes. They didn't let them stay at the Olympic Village. Are you out of your mind? You're not going to stay there. You're going to have Polish food at our house.
Exactly.
You're going to eat real food here. Oh, the Germans were just adored. And of course, the tournament was over for the Polish team in 7 days. They had their 4 games. Yeah. They were eliminated. You can go home now. They didn't go home. They stayed for the whole 2.5 weeks because they were put up in everybody's home, and they were taken out for day trips to go skiing, and they went over here. They became tourists.
They were becoming friendly with nice Canadian women, and
all these Canadian Polish girls, these
Yeah.
Canadian Polish boys started to get together, having a good. These guys weren't going home.
You'd
Are you
hear-
getting mine?
You'd hear more than one story about how some woman took it for the Canadian team and took the legs out of that Swedish guy.
So much for my PG-rated show. You got to do stuff for your country.
You got-
There's stuff you got to do for your country,
you
you
gotta
know.
step up when your name is called.
Yeah,
okay?
when your name is called, you got to step up for the team. I mean, come on, it's hockey we're talking about here.
The fact that some of these hockey players were cute had nothing to do with it. Now, I was extremely pregnant at the time. It
That's-
wasn't me stepping up.
It's true. It wasn't Jen. She was already knocked up. So it was all right. She was out of commission here. Oh my
I've
God.
already taken one for the team.
I thought I once had a stock market channel talking about stock markets plain English, but now I'm talking about the Olympics in plain English with respect to how to keep your team going. Oh my gosh, unbelievable. ATIP on the move, but it's the wrong way. Well, we're down 13 cents. Not the end of the world. I have Russians as neighbors, hardest working, nicest people. Uncle Bruce, as boomers and other generations age out of the workforce and new generations don't want these jobs, what effect will that have? That's right. Got to ask yourself. I heard this story a million times when I grew up about how I would hear my dad talking to other dads, maybe at the German club or something like that. And I'd see a friend of my dad's who would be like a contractor. He'd be contract guy. He would be building homes, additions to houses, renovating homes and stuff like that. And he would be talking to my dad. He said he has 2 sons and a daughter, and none of them want his business. And he'd built his contracting business for 30 years, and he was now in his 50s, late 50s. And he was very successful, and he had a crew of 20 employees, and none of his kids wanted to take over the business. And then I'd hear my dad talking to a plumber, and the plumber would say, "I'm making the equivalent today of $150,000 a year. My wife go on holidays every year. We have our house bought and paid for. We have 3 cars. The kids, none of them want to become plumbers. They don't want to do what I do." This was always going on because the new world that we were shown, the world that I was discovering as a young adult, was a different world than my father was shown. He was shown the upside of the world was maybe learning a trade. In Europe, it was definitely learning a trade. If you could be a carpenter, a cabinet maker, a butcher, a shoe repair guy, painter, concrete masonry expert, bricklayer, you had the job of jobs. You had the benefit of benefits. You were retired at 55, 60, guaranteed.
You had the title. You were a master.
You were a
tailor.
master watchmaker. You were a
watchmaker.
master masonry. Yeah, you were the top of the. You were looked up to in your community as a mover and a shaker. You were the top of your field, respected by all. But by the time the 80s and 90s and 2000s rolled around, we kids, we had our own dreams and aspirations. And today, it's a new world again. And there's no such thing as staying in your hometown and doing what your father did anymore. That's almost unheard of now. Almost unheard of. The thing was to leave where you were and branch out on your own and make your own life and get away from all that stuff. That's amazing. Do you remember Eddie the Eagle? I believe he was at the Calgary Winter Olympics. Yes, he was. What a story in the movie about him was great as well. Yeah, Eddie the Eagle, pressure on him was unrelenting. He really delivered from just being there. Just delivering a jump was unbelievable. The poor guy. But he did it. Everything is red today, says Drops.
Just to stand at the top of the jump.
Oh,
it's frightening.
just to get from his
I can't
hotel,
imagine going down.
get from his hotel to the event and back on the team bus or whatever. The world media was just dying to get a piece of this guy.
And the Jamaican bobsled team.
It's a Jamaican bobsled. Funny how Kovalev was on the Rangers the year after that game.
Yes.
The Russians started playing North American.
That's
I'd
right.
also cheer for the Russians over Philly. Zach spent playing English with Uncle Bruce Spetsnaz in plain English. I don't know what that Spetz, Spetznaz. I don't know. Thomas, Can never compare eras of any sport. The training begins so early. The soccer moms, baseball training, and playing all year long, and training technology is light years
And now it
from
starts
even
when you're 3
4 years.
old.
Yeah, 3-4
Jeez.
decades ago. It's true. How to support the Canadian hockey team in plain English. That's right. James Gunn. In the U.S., there's been such a massive push for all young people to go to college. There's now an incredible shortage of skilled labor. That is correct.
That is correct.
Canada too.
Yes.
Canada too. Spetsnaz was like a USSR Special Forces, laugh out loud, as
Oh,
that Spetsnaz.
that's it.
Gotcha. Yeah, I remember in the 70s when I went to school for watchmaking, I had to pay everything myself because I was a student learning a trade that didn't have a union. There was no such thing as a watchmaker's union. But if you want to become a plumber or an
Electrician.
HVAC person, which would be specializing in air conditioning systems, heating systems, an electrician, carpenter, there were unions for these positions. So even if you worked at a small 2-man contracting company that was specializing in carpentry, you were part of the union. And you were guaranteed certain pay rates for your work, which meant you could charge certain fees to get the job done to someone to hire a carpenter or electrician or a plumber. And I remember these guys who were going to school, they would only come to school for 6 weeks, and then they'd go back to work for 6 weeks, learning the trade on site, then come back to school for 6 more weeks of schooling, then back. They were getting paid to go to college. I was starving. I was surviving on $40 a week at that time. $20 went to my landlady for my room that I rented for the week, and then $20 was my meal money for the week, Monday to Friday. And then I came home on the weekends to make money on the side, and then got another $40 from my mom and dad to go to school for another week. I was starving. These guys were ordering luxury breakfasts. They would order scrambled eggs, ham, sausage, pancakes, a glass of apple or orange juice or whatever, and then a cup of coffee. I had a cup of coffee and a sandwich, a fried egg sandwich. That would be my breakfast, $2. And I'd get 5 of those a week. That's $10. I got $10 left. Oh my gosh, the difference. I was so envious of these guys, how much money they were paying. But I look at it today and I go, this should be the way. This should be the way today for all trades. It should be so easy for American and American and other jurisdiction children to learn a trade and be paid to do it. Not come out of school with $60,000 in college debt. No. Go to college and be paid to go. You pass, you keep getting paid. You fail, you're out.
60,000 is your first year.
That's right. And so you come out as a master electrician or a full blown, whatever your trade is. It's computers, it's plumbing, it's electrical, it's HVAC, it's software development. It's a trade. It's a trade. Dentistry, or not dentistry. Maybe I don't know, interior design. I don't care what the trade is. There's a million of them. And if you got paid to go to school, you would dedicate yourself to the school. You'd dedicate yourself to the trade. You wouldn't have so much fun to be partying all the time on the weekends to get drunk. You'll get drunk once in a while, but not every weekend. You would be in the trade you would be worked hard to do it, and you'd be back and forth. You'd be working, and then you'd be in school, and you'd be working, and you'd be in school. And you'd be a 4-year program. At the end of 4 years, you're fully accredited, fully licensed, and you're now making $60 an hour, $80 an hour, whatever that value, whatever that trade is, the value of that trade is. I remember in 74, 75, 76, when they graduated as electricians, they were at $22 to $25 an hour. Minimum wage was $1.50, $2. It was 10 times the minimum wage back then. It's no longer 10 times today's minimum wage. Plumbers don't get paid $300 an hour, 10 times $30 an hour or whatever it is. But a plumber can get $50, $60 an hour versus a minimum wage of $15 an hour. You could make 4 times the money. Good living and no debt. You'd come out of school with no student debt of any kind. And so when you're making your $40, $50 an hour, after tax, you're living on a nice buck. You can get your own apartment very quickly. You can buy your own car through a loan almost instantly, very quickly. And you had an immediate reward for those 4 years of work to get the degree, to get your papers for your trade. And we've got a shortage. Yeah. Yes,
You
ma'am.
hear that ticking?
Uh-oh. I hear something. Yeah.
That's your bagel.
Is that a bagel under construction?
That's a bagel.
Oh my God! I feel like I don't deserve it.
I don't know what's on it.
What's going to be on that bagel? Well, I'm thinking Cheese Whiz today.
Okay.
Yeah, I'm thinking cheese. We'll go with the Cheese Whiz bagel today. See what happens. I'm running out of time to have my Canadian Cheese Whiz because we're going to cross the border next week and it's all over.
You can
Uh,
take it with you.
Well, what's left of it? Yeah, I mean, how long is that going to last? And then I got all the robbers that are going to try to steal it from me because these Americans,
No.
these Americans who sneak into your condos and try to
Those
steal your Cheese Whiz.
Highwaymen.
Those
After
highwaymen.
your cheese
Those
whiz.
American highwaymen. Don't I have a way of making friends? Dow is down 376, S&P down 69, NASDAQ down 336. Rocket Lab is up 44 cents. It's defying everybody. SoFi down 52, GameStop down 646. We got those of you who have written options on GameStop. Some of you have written 220s, 240s, 250s, 260s, 270s, 280s. There's some of you out there with some way out there contracts that are probably looking a lot better now. There might be opportunities to roll a little closer in or a little closer down. You might buy back an April contract you wrote at a high price, at a high exercise price, and just write an April contract that's $50 closer in and bring in a bunch of cash. That's a possibility. Or you're buying back Aprils and writing Januaries, or you're buying back Januaries and writing Decembers or Novembers. There's opportunities here. Take a look. Matterport down 81 cents to 2006. ME down 27 cents to 845. SmartRent 12.90 down 13 cents. We've got Spire up 9 cents. It's up 14.13. It just broke through the barrier. 451,000. Go Spire. Go Rocket Lab. Notice how one of them launches satellites, the other one maintains them and manages it. Isn't that interesting? That's kind of interesting. ATIP down 14, Sextera down 28, AMC down $1.58 to 37.72, Robinhood down 41, Vanik down 8.82 today. That's a bargain at 262. Home Depot down 5.86, IBM down 8 cents. That's pretty good performance today. Dow down 381 points at the moment at 34,487. The low of the day was 34,407. So we're 80 points off the worst of the day. But that's nothing to get excited about at this point. We'll see how this day works out. Microsoft down 8.58 a share to 285 a share. The high, 52-week high, 305. We're off. We're how much we have? $20 a share from the high 2 weeks ago. Apple 142.96 down 241. Tesla down 6.94. Bed Bath & Beyond down 73 cents. BlackBerry down 21. Royal Caribbean is down only up 16 cents now. Got as low as 91.90. It's now 92.57. So Royal Caribbean only holding a 16-cent gain. Goldman Sachs down $4 a share to $3.95. That's a bargain down there. Amazon down 79. Facebook down $12. Alphabet, which is Google, down $100 a share to $27.29. Target down $4. JP Morgan up 36 cents. Costco down 9.76. Walmart down $1.41. Cisco down 73 cents. Nvidia down $8. Walt Disney down $3. We have a red day here overall. Overall, yes. But is it a bloodbath red day? No, it is not a bloodbath red day. 1% drop on the Dow right now, down 375. We've actually been bouncing off the lows already. S&P down 69, NASDAQ down 338. Oil now down 15 cents a barrel. Oil is in the red, 75.31. Interesting how that's 75 here, 80 in Europe for a moment this morning. $5 difference between the two. And that is not surprising, but I find it interesting to observe that. All right, there you go. What can I say? No one is learning to work with tools of the trade anymore, says Ashley. Coyote, I know the feeling. Ate so much beans and rice or ramen in college from being completely broke. Yeah. Of course, plenty are learning trades. There's just not enough of them keeping up with demand. Exactly. That's exactly right. We don't have very many solid apprenticeship programs. There you go. This should be government sponsored. Apprenticeship programs should be paid by federal, state, or in Canada, federal and provincial governments. It's an investment in your infrastructure of your country to maintain it. And it's an investment in creating people who pay a lot of taxes. These folks who are making 50, 60 bucks an hour are going to pay a lot of taxes. They're going to spend their money, pay sales taxes when they spend their money. They're going to buy homes, fix up their homes. They're going to create jobs, being spenders of money. Yeah, we need to create as many domestically born tradespeople as humanly possible. We live off of this backbone of democracy and of the economic system. Absolutely wonderful. Why are we having to import young people to take trades, to do trade? Nothing wrong with that in a way. I don't mind it. But if we can create domestic electricians and U.S.-born, Canadian-born plumbers and carpenters and cabinet makers and millions of trades, including the newest, latest, hottest trades, I think that would be tremendous. And we could then certainly import many, many more, thousands, millions more from overseas to do even more of this kind of work. We would wealth up North America dramatically. We would really wealth it up. It's just in front of us. I never call a tradesman. It takes 2 weeks or more to get someone out here. I can do it all by myself. Well, good on you, but you're one of the few that can do that.
If you're handy.
Most cannot. It's right.
Okay,
Do
so
you
there's no
have
plate.
to keep Cheese Whiz in the fridge in Canada? Yes, you
Yes.
do. This is real stuff. Oh, no plate. Oh,
No plate.
Yeah, that's right.
Yeah.
No plate. We're out of plates. We're nomads. I want a napkin now on my food. Oh, it's tough times. Oh, hardship.
Talk about your internship. Our little guys being in property management, those who were taking either boiler or building, whatever, our summer students, their wages were supplemented by the government.
Right.
That they encourage you that we'll pay half.
We'll pay half the wage you hire. You
That they
employer
need to
pay the
have
other half.
jobs, summer school jobs
Sure.
in the field that they want to.
And the minute they're graduated, they're hired. They're
Well, that's
employed.
just it.
They're instantly employed. They're instantly paying taxes back into the system that got them the job in the first place. They don't cost the government any money. They make government money.
Yeah.
They make the government
Yeah.
richer. And it's another kid not unemployed with a skill that nobody wants.
And it's another
Yeah.
industry that is
Yeah.
aging out.
Yes. Building managers are aging out. We need a new wave.
Operators
Building
are aging
operators.
out.
Badly, desperately. Every skyscraper, every apartment building needs a building operator. These people are old.
And when they go, they take all
On
of that
average.
history with them.
They take all that knowledge and experience and it's gone. It's evaporated into
Yeah.
the sky. You got to have the young kid taking over from the old kids.
We have to have a better mix of ages.
Yes. Men and women. Yes.
Yeah. Well, yes, and it's an equal opportunity industry.
Yes.
Yeah. It's not like you have to lift the boiler and move.
Economics
You just have
101,
to
man.
turn it on.
Economics 101. But you show me which political party will get defeated by not encouraging this. You tell me.
Right,
You
yeah.
tell me any politician that will lose his seat in whatever legislature, city council, state thing, county board. You don't support trades like this, you're not going to lose your seat as a politician. So who do you cater to? The gun lobby, the tobacco industry, the financial industry, the airlines, whoever can afford to bribe you. Who can afford to bribe politicians on behalf of plumbers and cabinet makers and building operators and software technicians? No, nobody. So these guys don't cater to those needs because they're not afraid to losing their seats. Welcome to our present day world. I bought back most of my covered calls on earlier smaller dips as Vilbus. James, ME is a lot like Spire in that it wouldn't take much volume to move it. You are right. Joe, lose the spare tire and smuggle some Cheese Whiz across the border. Spire went green, thumbs ups. I'm waiting for ME Spire SoFi to pop. Let's go. B Fitz, Bruce, even though a contract might be pricey, say SoFi, January 15th going for $375. Is it worth the price given the potential? Well, SoFi is still $212 in the money, so I'd buy that contract. Yeah, I would. I'd buy that contract. Definitely worth it. Yes, indeed. SoFi can move up $5 at any moment in time. Any moment, SoFi will pop $5. I don't know what the moment is, but it's going to happen, and you're going to miss it. And this contract will be worth $6 a piece or more, $7. Yeah, double your money in 5 minutes. Get ready. I don't know when. SoFi down 54 cents. Today's buy day. Rocket Lab up 38 cents, $14.70. SoFi's perfect day to write puts on SoFi. GameStop, perfect day to write a put on SoFi. Perfect day to write a put on GameStop. Down to 182.98, down 650. It's a great day to write a put on GameStop. Great day. Write 150s, 140s, 6 months out. Write 160s, 6 months out. Oh, easy day. Matterport, 1988 down $1. ME down 29 cents at 8.43. SmartRent down 13 cents. Spire up 18 cents to 14.22. ATIP down only 17 cents, but it is down today. Sextera down 22. Yes, kids, we're down 413 points on the Dow to 34,456. The low, 34,407. We're about 49 points off the low of the day on the Dow. I don't know if we're going to hit a new low or not. If we don't, technically, this might be the beginning of a bounce up from here. We'll see. Down 1.2% on the Dow. S&P down 1.6% to 74 points lower. NASDAQ down 356, down 2.3%. That's the deal of the deal right now as we're here watching the deal. Microsoft down 881. Might be time to write a put on Microsoft. Ever thought of that? Write a put on Microsoft. Can you afford it? That's the catch. There you go. Rocket Lab at 1468. Oh, take the market higher, Rocket Lab and Aspire. Run that market. Okay, let's see what we got on a bagel here. Here we go. We got a nicely toasted bagel here. Oh my.
I can hear you crunch.
Crunchy. VCR repair.
Yeah.
Hey, Uncle B. How far out in time should we be buying Royal Caribbean puts? Thank you for all you do. Next summer. Spring, summer. That far out. Way out though. I still have tools to fix VCRs. Freethinker, definitely not the same Cheese Whiz as USA. That's right. Our Whiz will survive nuclear winter. Got that right. Not the same stuff. No.
What Sharon the cockroaches will be eating? Is that what he's saying?
Yeah. Richard, you got it. We got two going up. I like it when you tell people to write GameStop puts. Yeah. I think that's a great move. Zach's, I see some of these stores around, they never look open, but some are actually operating. I even have a typewriter repair shop in my town. Yep, there's still typewriter repair shops alive. Twinkies and Whiz forever. There you go. Yep. Oh my. So good. Have to go to the dentist today. I'm getting a root canal. Oh boy. I go tomorrow for cleaning, scaling. Thursday I go for an extraction. Next week I'm getting out of town. I can't handle it anymore. I gotta get out of here. I can't keep getting beat up like that anymore. I don't want to do it. Don't want to get her done. Oh my goodness. We're down 418 on the Dow. We're down 76 on S&P. We're down 365 on NASDAQ. We're down 31 cents a barrel on oil. That's where we are right now. And we're having a Cheese Whiz bagel, sesame seed bagel. Oh. This one's crunchy. Jen got this one going. Oh yeah. This is a crunchy bagel. I love it. Getting yourself the Marathon Man treatment, poor Bruce. The $6 million man, bit by bit. Yeah, unbelievable. By the time they get me rebuilt, I'll be too old to do anything. Hi, Uncle Bruce. Is today a good day to write a GameStop covered call in the money or at the money? Well, I would not be doing that today. I would not be writing a covered call today on GameStop, as I think we got a 675 dip here, 182.73. This is in sympathy with the market today. This isn't going to last. This market has not got enough oomph behind it to really go very far. GameStop, in a matter of days, can pop up 20, 25 bucks a share back to 200. I would not get caught doing that. Today would be a day to write a GameStop put contract, or 2 or 3 or 4, however many you can afford. If you can write GameStop puts, that might be something that you want to look at. I'm going to take a look right now at the put contracts for GameStop. Kind of curious to see what they're going for. Just for fun, I want to look at January puts. There you go. If you have $15,000 lying around, you can write a $150 put contract on GameStop, and you'll be paid about $19 a share in cash, which is $1,900 for that contract. And you're offering to buy GameStop for $150 a share until January. If you did have to buy the stock for $150, since you've been given $19 up front, you're paying $131 for the stock. GameStop stays above $150 between now and January. That $19 is yours. $1,900 for a $15,000 investment. It's a good scratch. You want to write a 160, put up 16,000, you'll get paid $2,300 for a 160 put contract. You want to write a 170, put up 17 grand and get $2,800 in premium for January. That's a deal I like. It's all out of the money, all premium, and it's all going to depreciate in time. The next 4 months, these are all going to go to zero if the stock stays above 170. Now, if you get a little more, chutzpah, put up 18 grand and write a 180 put contract for January, you'll be paid $3,400 for 1,800. You're approaching 18% on your money. You want to write a 190 contract? That's in the money now. So what? You're going to get $40 for a $19,000 investment. A 200, that's 20 grand. You put up 20 grand, you'll be paid $4,700 in premiums, book value premiums, to write a 200. So if the shares go above $200 by the time January rolls around, this contract is worthless. You keep all $4,700 on a $20,000 investment. That's a 23% return on your money in 4 months. If the shares are 185, which is kind of where they are here, not quite, but let's say they were 185 but in January, the contract will only be worth $15. You got $47. You only have to buy them back for $15. You keep the rest. Nice return still. The shares are at 170 in January. They're 30 in the money. You got to pay $30 to get the contract back. You still keep the $17. You still make money. So upside there. Puts are an idea. I want to take a look at really close inputs. Okay. The GameStop puts that will expire first are this Friday, 3 days from now. You could write right now a 180 GameStop put contract that expires in 3 days. You would receive about $3.60 a share for that. Or the stock's 181.71 right now. You could write a 182.50, just in the money, just on the money. You'll be paid $4.75. If the shares bounce back to 185 by Friday, just 185. That's still down on the day today. Those 182.50s will be worthless. You keep all 475. You want to write 185 contracts? You could right now haul in about $6. 187.50s you can haul in right now about $7 something. 190s for this Friday you'll haul in right now about $9 a share for 190s. If the shares pop back to 185, these are only worth $5. You keep the $4. Just saying. That's just this Friday. Now, next Friday, because we have a little bit of time here, premiums are juicier. You could write a 180 for next week Friday and pull in about $6.75. You write a 185 contract for next week Friday, you'll be paid about $9.25. You write a 190 for next Friday, you'll get almost $12.50 a contract. That's a week and a half. Oh, good money. Just saying, you can do it. I'm waiting for GameStop to drop a little more for the limit to catch. Right on, Beach Boy. You're doing it. You put in your buy order and you forgot about it. You just leave it alone. You put in your buy order. This is the price I'm prepared to buy my contract back for. You come all the way down to here, the money's waiting for you. I like that strategy, man. I like it a lot. Way to go. Way to go. I like it. I like it a lot. Any ideas why my broker denied that application to trade options? It's possible that they ask you a series of questions and they want to know how long you've been an investor and they want to gauge your knowledge. And you may have answered a question that springs them to say, no, not enough experience. We're not going to let you do it. That's a guess. Each broker is different, though. Hey, Uncle Bruce, I missed the start of the show this morning, but is there any particular reason for the sea of red today, or just a red start to the day? There's a lot of little things going on that people are talking about. So a whole bunch of little things. We've been talking about a bunch of these little things now for a couple of weeks, and it's just constantly. We're constantly noticing that there are China problems, oil problems, interest rate issues, inflation wonderment, gas supply problems in England, energy problems in China, not paying dividends or paying bond interest when it's due in China, supply chain problems in North America. Not any one thing is a recession creator or anything like that. But when you add up enough of them, you're just giving worry warts something to worry about. And so people need an excuse to blow off some steam. And the stocks that are getting hit the most are the FANG stocks. We're down 2.69% on the NASDAQ. We're down 1.3 on the Dow. And there's just I think there's rotation going on. I don't think people are getting out of the stock market. I think they're realigning themselves in the market. But the stocks that they're selling are the ones that have made them the most money, which are the FANGs, and they're reallocating into other areas. And so the indexes are getting hit because the FANGs are off, They're going to go too far, too fast, too low, too far, and then they'll bounce the other direction. But at the moment, the S&P, the NASDAQ, and the Dow are affected by Apple, Microsoft. And then there's Google and there's Amazon on the S&P 500 and NASDAQ. They're the ones getting hit the most. And so that's what it is. I don't see this as a full-blown get out of everything and run away from the market nonsense. We don't have a recession coming. We don't have 8% interest rates coming, nothing like that. We have a lot of money looking for a place to go that's safe, that'll give it a better return than nothing. And you can hold Apple and get 0.6% on your money for a dividend, or you can buy IBM and get 4-something%, or you can buy growth stocks like Rocket Lab or Spire. You can divvy up Apple money into 15 different places and go into 15 different investments, including some of the SPACs that we follow, former SPACs. But sometimes it's the reverse. People will sell 15 different things and just buy Apple, and it goes the other direction. So right now, that's what I think we got right now. Aurora says, "Thank you, Bruce." Mohammed, is that a way of protection from myself? Is that a way of protection from myself? I'm not sure. I love my red portfolio. But again, my broker doesn't recommend options based on my experience. I still can, but they now have "we told you so" disclaimers. There you go. Yeah. Okay. I finally got some Apple. Got it. Thanks, Bruce. Same old story. Is absolutely why I came here daily. Your perspective is worth its weight in member subscription. Right on, guys. Opinion, a headline, opinion. U.S. consumers are gloomy about their finances, and that means a recession could be near. There's an opinion piece that's being treated like breaking news. Garbage.
Could be.
Pure garbage. $17 trillion in American savings account as a whole. Does every single American have a whole bunch of money in their bank account? No, that's not what's being said. But there are $17 trillion in money that's willing to be spent into the American economy, if only it could be. That's what's awaiting this market. We're not going lower, not by much. Silica saying that to Mohammed, basically, yes, it protects them, the broker, as well. I opened a Tastyworks account for options, and be careful how you answer the questions. Spler, Uncle Bruce, do you think it is a good idea to wait with closing out my ATIP money that I want to cash out? Or do you think it's better to close now before it's going down anymore? I don't think ATIP is going down much lower. It's pretty well. It's giving up pennies on down days, just pennies. It's down 17 cents. The stock, when it explodes, it's going to $7.58 as soon as they announce the CEO and the CEO tells us what the plan is. We're on the other side of this thing. Right now, on a down day, on a down stock, it's the hardest time to hold it. You have no good reason to hold it. It's down, the market's down, it's quiet, nothing going on, the world is coming to an end. Every excuse. This is where you say, screw you. You're not getting my stock. I'm not giving this stuff away down here. Thank you very much, but I think I'll just hang on to it. And if I have some extra cash, I'm going to buy some more. I'm going to lower my average even more. Bought me some more of that there GameStop. Yes, sir. Yes, sir. Mohammed, but how am I supposed to learn option trading if I got denied? Well, you might open an account with another firm. Some platforms will let you trade options and stock with pretend money, and you could do pretend trades. That's a great way to learn how to do this. Watching my classes is another great way to learn how to do this. Check them out on my website, stockmarkerswithbruce.ca. I had a class this morning, final review, fun times.
Robin, that's how I got forced into Robinhood account for options. Not my top choice. But at least I'm learning to swim. Thanks for the show, Bruce. Thank you. Hey, another GameStop limit order I missed by 5 cents. It's okay. Just sit tight. Stocks fluctuate. Sometimes you get them, sometimes you don't. You got to be a prickly pear about this. Prickly Pete. You lie in the questionnaire. They just want you to know you have 2+ years trading options. They don't know which brokers you've used. It's a liability thing. They don't really care. Got a couple of really nice cheap Matterport calls, says Anti-PC. I tried that twice. Level didn't work. Mark came in late. What is happening to the market? I lied and it worked, says Freethinker. I tried twice, got approved the second time. I had to do a phone interview. Cody, yeah, Robinhood just lets freaking anyone buy and sell options. Scott Brewer, Investopedia has a good paper trading capability. It's good and it's free. There you go. I know that I think it's TD Ameritrade has pretend money. You can do those. You can do that with those guys. There's others. You have to do your research on that. I'm not able to recommend any one brokerage firm over another to you. You're on your own on that front. But yeah, there's ways. There's ways. There we go. That bagel was fabulous. That bagel was crunchy and delicious. Oh, excuse me. I loved it. Anyway. Okay. Slur TV says, I thought about this because I have 70 units extra. The other 100 I will still hold for sure, but I'll need to cash this out today, and I have regret now that I was yesterday too greedy at 398. Auntie says, go to Schwab. Jordan, I think they also want you to answer questions as if you're a safe long-term investor, not short-term day trading. It looks like last week was probably the bottom of the small dip on ATIP. We all have our opinions on how it's been doing and what's going on, but today is a down day on the markets. We're down 417 on the Dow, not as bad as it was, but we are off. We're down 76 on the S&P. We're down 371 on NASDAQ. We were under 400, more than 400 down on NASDAQ a while ago. Oil down $1 now, $74 a barrel. I just don't think oil is going to 100 at all. I don't think so. Way too much oil. Yep. Sure, I'm happy to see natural gas prices where they are. I don't think it's sustainable, but they're over $6 a thousand, which is substantially higher than a year ago. I know that this province right here will get much closer to a balanced budget with energy prices rising as they've been, which will help this province pay its medical bills, because this province has the highest per capita medical expenses in all of Canada, because we've got people in government that are just not taking this virus as seriously as they could, unfortunately. I think as soon as the CEO is announced that ATIP stock should jump a couple of bucks, I'm thinking too. I think so. I think that I think there's a nice little pop coming once they make that announcement, and then let the CEO announce the new team that they're putting together, including investor relations. And I think that ATIP could pop to the $7.50, $8 range pretty fast. That'd be kind of nice. Will change a lot of you out there with your portfolios. It'll change portfolios dramatically out there. I know a bunch of you have the 250 calls, the $5 calls. You bought the stock down here in the threes. You're going to do very well. And I can't wait for that moment to happen. I can't wait. I'm just sitting here going, come on, do it. Let's go. We're up 34 on Rocket Lab to 1466. We're up 80 cents now on Spire. Spire is at 1484. High of the day here. 584,000 traded. It's looking good. Spire Global and Space Chain steam up on the feasibility of, what's the headline says, of blockchain in space. Spire announced a new partnership with Space Chain, a global space as a service solutions provider, developing the world's first decentralized satellite infrastructure. I don't know what this means. It just sounds great. Today, together, Spire and SpaceChain are launching a mission to demonstrate the feasibility of blockchain technology computation in space and resolve land-based centralized infrastructure issues. I still don't know what that means, but it sounds sexy. By deploying a solution in space, Spire and SpaceChain aim to maximize data security and increase the resiliency of computing operations. Under the collaboration, Spire will utilize its Saber-tooth supercomputing module to fulfill a two-part mission with SpaceChain to conduct an on-orbit upload of SpaceChain software to an existing satellite before further building out SpaceChain's capabilities via a payload on a new satellite expected to be launched later this year. I still don't know what that means, but it sounds sexy. I like all this. It's making the stock go up, and that's what I care about. Stock go up, announcement good. Okay, there you have it. 82 cents gain at 14.86. The stock could run back up to 20, and wouldn't that be nice? Maybe it could go beyond that. Come on, make it happen, and my viewers will be very happy. And I like happy viewers. I really like my viewers to be a happy bunch of happy people. SoFi, $17 a share, down 70 cents. GameStop down 7.17. Matterport down $1.18. ME down 36. SmartRent down 13 cents. None of that makes my people happy. But up 68 on Spire and up 29 on Rocket Lab does make my people happy. So we're happy about that. Let's see. That's why I'm holding that long position, Sister. Put you mentioned on GameStop, strike 140 expiring January, is really, really interesting. I would get about 1,500 US, which means I would buy the stock at 125, right? Yep, that's right. That's right. That's correct. And of course, if you write the 150s or the 160s, you'll get more money, but you won't get that lower price. It might be 127, 128, 130. But yeah, the risk you're taking is you're putting up more money to buy a higher priced put, but you're getting more money from the put, right? So there's that to think about. Yes, yeah, you're figuring it out. You're getting it. Uncle B, it's awesome sauce, says Nelson. It does sound sexy. I'm not gonna lie. Cloud service now in space. Blockchain in space is the way. Splair, GameStop needs to sell the PS5 directly when it's arrived. If I can't come that day, next day someone else can be happy. Ryan Cohen thought probably about hard rules for making money. There you go. I'm a big fan of selling 2022 puts. There you go. Yeah. I mean, you can write October puts for ME or GameStop. October puts, November's, December's, whatever month you want, at whatever exercise price you want to try. The stock's 182.29, and of course, the higher the stock goes, the lower the value of the puts become, which means the richer you get as the stock goes up. So hey, see what you can do. Splair would like to know how the next earnings report will be with PS5 sellings in Germany, 50 euros above the normal price. What I know is I talked to the store manager and an employee at a GameStop in Calgary, at a small mall, not one of the big malls, and they were telling me they have no PS5s and no Xboxes for sale. None available. They're sold out. He says when they come in the door, they immediately go out the door at full price every time, all year round. So on the one hand, that's exciting because they're making full margin on a product every time they sell it. The bad news is they could sell so many more if they had them, but they don't have them, so that's limiting their gross revenues, you see. Gross sales, gross revenues. This is one of those catch-22s where it's all good until it's not good, and not having the supply is not good. So interesting stuff. The Dow down 462, S&P down 83, NASDAQ down an even 400. Lorraine, I want to pay for my classes with a credit card. I don't use PayPal. I'm having trouble paying for my classes. Now, Lorraine, I apologize to you because you did send me an email about this, and it did come in yesterday. And Jen and I had to run around, and I was telling her about this in the car. I didn't get back to you, and you're just reminding me. And of course,
I'm on the air, so I can't email you at the moment. So thank you for bringing this up. So what I'm not understanding is why is it that you can't acquire the classes using a credit card? Because I was led to believe that even using PayPal as my provider, that you would be able to make a purchase through the PayPal button that's on my class with a credit card. It would work. You don't have to be a member or account holder of PayPal. You can just do a one-time transaction, as many one times as you wanted, to buy a product through your credit card through this PayPal link. I thought that's how this worked. I must be missing something. Does anyone out there know the answer to this question as to why or how this isn't happening? I'm kind of curious to know. Because I believe that people have made donations to me through PayPal using their credit cards, and they're not members of of PayPal. Excuse me. So I was wondering about this. If anybody have any idea, please let us know. Question: Spire taking a shot, probably only 500,000 more. Volume still low. Jordan, Rob, I'm hoping if we get a couple of solid green days, the volume will come back. B Fitz, Bruce, with the market trending down, can we expect another day or two of red? Wondering if tomorrow might provide even better deals. That I can't answer. It depends on how the second half of today goes. If we start seeing a rally towards the end, we may have a rally tomorrow all day, and we'll be back up again. Go Spire, go, says Anti-PC. I used my credit card to buy classes, so someone else is doing this. Maybe it's from where you're from. I'm wondering if that's it. And the credit card, add the credit card in your PayPal, says I. Rob, yeah, I used my card. I think you have to check out as a guest or something like that. Aurora, I was able to purchase your class with my credit card without being a PayPal member. I'm in Canada, so we're getting this. This is good. Thank you, everybody. You have to hit the PayPal button, then click, then hit check out as guest. Okay, maybe that'll work. Orion, hey, Uncle B, I have a theoretical question. If I buy a call option for SoFi for $50 and the company gets acquired for $40, what happens to my option? All right, so if you're buying a $50 strike price option and the takeover is $40, a couple of things. First thing, if SoFi were to receive a takeover offer, and even if SoFi management recommended you take the deal at $40, that doesn't mean anything that the deal will go through at $40. What could happen, and I've seen this happen with other takeover deals over the years, where company number one tries to take over company number two, and the two companies agree to do a deal at a set price. A third company comes in and says, no. I'm going to make an offer for company number two at, instead of $40, I'm going to offer $45 a share. Now, management of company number two cannot say, we're not going to consider this offer. They have to consider it because the board of directors of company number two, the takeover company, must act in the best interests of its shareholders. That's the deal. So if company number two has a better offer, it's a cash offer, then company number one, the company number two offer will be the one the shareholders will want to have. Now, that could force company number one to come in with a better offer than company number three, making takeover for company number two. It might be that they come around and say, okay, we'll pay $50. And now we have a third offer. Now, you as an option holder of $50 calls, once the deal is announced that, there's a takeover offer at $40 a share, you might notice a couple of things happening. The first thing you might notice is that the shares only go up to $38 a share. They don't even go to $40. The shares trade under the agreed deal price. That could be because the takeover offer is a stock deal and the street isn't all that excited about it. The street's going, well, this company is going to issue stock to buy this company. And by the time it's all done, there's going to be way more shares outstanding. $40 a share sounds great, but it's only paper. It might not fly. The second thing that could happen is the shares trade over $40 a share. They trade at $42 a share or $43. because the anticipation of the investment community is another offer is coming from somebody else that'll be better than the first offer, especially if the first offer is a paper deal only. If it's just a paper deal, there's a chance a second offer might come in that's like, we'll do a $42 takeover offer, but it's half cash, half stock. The stock might trade at 41, 42. It might be a $45 takeover and the stock trades at 42, 43. The third thing that can happen is that you get the first offer and then you see a second offer and then a third offer comes around and it's an all cash offer, $48 a share, all cash. The stock could go right to 48 or it could go beyond that, could go to 51, 52, putting you in the money now all of a sudden. Because what you have is three companies in play. The first one with the first deal, the second one with the second one, the third with the third one, and the outside street watching all this happen, wondering why are these three companies killing themselves to try to buy SoFi? What has SoFi got that would want to make them do this? Now, it could spur a fourth takeover from somebody else at 55, or it could create company number one to come back and say, we're prepared to do a stock cash offer at $60 a share. One never knows where these go from. And so your options, even though they're $10 out of the money on the first offer, if that's not the only offer, you may find yourself very quickly finding that your options are going up in price because the stock is trading at a higher price and a second offer comes in and then maybe a third. The next thing you know, you're looking at your options going, oh, wow, I paid $1 for these. And they're trading at $4. You might find that the stock's at $52. Your contracts are worth $2 book value, but they're trading at $4 because the option players are expecting another offer to make the stock go even higher than 52, which would lift the contracts beyond $4 to $5 or $6. This is where you come in and decide, what do you want to do? You want to take you want to sell out right away at a couple of bucks, or do you want to wait a little bit and hopefully a second offer comes in and you get even more, or a third offer? You're not done. You're not done if there's a $40 offer and you get a $50 contract. You're not done. Not necessarily. Lorraine Innes, just choose PayPal and you will be prompted to log in PayPal or pay with credit card. Choose the second option. This is good advice. Splayer, maybe the payment is too huge for the card. Farragon, Uncle Bruce, please tell us about a hypothetical $400 offer. I never forget the day where, I'll never forget the day where Farragon had a call option on SoFi. He bought a call option at $25, and he only paid 25 cents for it because it was so far out of the money. And he had 10 of them. He had 10 call options at $25. He paid $250 for these contracts. And all of his friends mocked him for weeks. They mocked him because they said, Farragon, what are you doing buying $25 call options on a stock that's trading at $17? You're never going to make any money. And then the day came that Amazon came knocking on the door and said, hey, we'd like to take you over at $400 a share. And Farragon had to do the math, and he had to figure out, how much does this mean to me? And he realized that he was $375 in the money on every one of his contracts. And every one of his contracts were now worth $40,000 each. And he had 10 of them. And next thing he knew, he had $400,000 in contract value in his hot little hand. And he decided to sell his contracts for $400,000 US and cash in. And he remembered the day after he did it, he remembered, you know the guy who told me that I should have done this was Uncle Bruce in Canada. Uncle Bruce on YouTube. I remember him talking about the upside of this company and how high it could go one day and that there could be a takeover offer one day. And it was because of him that I went from $250 up to $400,000. What am I going to do to reward him for this wonderful, wonderful tip that made me all this money? I'll never forget, what's his name, that YouTuber guy. What's his name? from Bulgaria or something like that. He had hair down to here. What was that guy's name? I've never remember. What was that guy on YouTube that told me to buy these contracts? Told me about this takeover. I'll never forget what's his name. And then when I remember his name, I'm going to reward him for that wonderful tip. I can only remember his name. I need another beer. Maybe having another beer will remind me of who told me about this takeover possibility on SoFi. But someday,
I think
you know, oh, maybe, yeah. Farragon says, and now I'm going to jail for tax evasion. There we go.
That's
Farragon's
right.
in a jail cell, rotting in a jail cell for tax evasion, and is sitting there going, you know, I should have reached out to my buddy Bruce. I should have remembered that name when I had the chance to remember that name, and I should have asked for some advice at the time regarding my tax situation. Maybe Bruce could have helped me out, and I could have sent him a little something for the advice, for all this advice. But no. I went out drinking and partying for weeks on end, and I forgot all about him. And the next thing you know, I got a knock on the door from the authorities one night saying, "Are you Farragon?" And I went, "Yeah." And he said, "Did you buy these contracts at 25 cents and sell them at $40,000 each?" Yeah. Do you have a record of any taxes paid on this transaction? You're going to go, "No." Would you like to come with us, please? Get in the back of this car. Let's put the hood over him, and we'll take him away to tax jail. There you go. Rob is saying, Farragon, to Tony jail with you. You're going to the Tony jail. There you go. You're locked up. Never heard from you again. Oh, man. You know, then, of course, what am I going to have to do? I'm going to have to take a private jet undercover, and I'm going to have to, in the dark of night, land in wherever you are. Is it Belgium or I don't know where you are? Amsterdam? No. I'm going to have to go over there, and I'm going to have to talk to the authorities undercover. I'm going to have to work a deal to get you out, and then they'll let you out, and I'll leave, and you won't know I did it, and I'll get you released, and they'll work a deal with you to work out the tax deal, and you'll know from nothing. You'll just know. You'll have no clue that your buddy Uncle Bruce pulled all these strings to get you out of tax jail because you didn't report what you did. Oh man, what I have to do for my viewers, it's like, you know, I open up my shirt and the suit that the big S shows up, the Superman, and I have to do superhero things for you people. It never ends. Uncle Bruce, why is the market down? Orion, it's complicated, but in as simply as I can explain it in plain English, there are more people trying to sell stock today than are trying to buy it. And those who are selling are in a bigger hurry to sell than the buyers are in a hurry to buy. And so we have an imbalance on many stocks, and that essentially is what's going on today. That's the reason. Asplayer, I never forget you, and in 2 to 3 years, we probably meet us on the cruise line, and I'll let the money rain in cash. Farragon's laughing. Sean, Bruce, hi Uncle B. Here's $5 for you. I sold some 190 GameStop October puts for $6.50. I woke up to the stock under break even. What do you recommend? Try to get out or sell calls when assigned. So you sold the 190 puts for October. Let's take a look here. You sold 190 October puts. And you received what did you got? You sold and for $6.50. When did you do this? This must have been a while ago. Is that right? I woke up to the stock on break even. What do you recommend? So the stock right now is down 681 to 182.32. Let me do a little refresher here. See if I can get this to work. I want to double check that this is refreshed and we're accurate. Here we go. October 1, here we go. The contract now, 935 to 1045 is the bid ask on the put contract. Sold some October puts for $6.50, woke up to the stock under break even. What do you think? So 190, they're trading at around $10. So it's a 180 buy right now. So if you were exercised at 190 right now, you'd have to cough up $190, but you've got the $6.50. So you're paying $183.50, but the stock's at $182.50. So you're $100 further out than you need to be at the moment. Obviously, the each day goes by. We'll see how it goes. If the stock goes to 185 this afternoon, 186, you're still in the clear. You could just buy it back for probably what you sold it for. You'd be fine. Now, theoretically, you could buy back this put. Let's say you did buy it back at $10. and then you could write maybe another put for a week or two further out in time. You could go out to October 8, 15, or 22 and write the same price, or write a lower price and bring in as much money as 10 or more. Think about that idea. Okay, it's a rollover on a put. It's a put rollover. Can be done. If you do the 190 for next week, you'll bring in about $13.50. So you'll bring in more money, but that's next Friday. You can bring in about $11.75 for a $187.50. You can bring in about $10 if you write a $185 for next Friday. If you go another Friday out and get more to go after more premium, you could write a $185 for about $13.50, which would be $3.50 more than you're now. So you'd get $3.50 more cash in your account, and you'd only have to pay $185 for the exercise. You could write a 180, which is at just out of the money here, which is cool. You'd get about $10.75, which is a little more than what you're paying to get this back. And so you'd bring your 190 down to 180. Good move. But if you wanted to write a 190, just the same exercise price, you bring in $16 now for a 2-week contract versus paying 10 to get this back. You'd add $6 cash to your account, which means you'd have $12.50 total cash to buy stock at 190, which means you're paying 178 for the stock, and it's trading at 182 right now. That would correct that very quickly. So you have a few options to go with. You're not done yet, Sean. Decide what you want to do. All right. Otherwise, just sit and wait till Friday, or wait tomorrow the stock pops back to 188, 190. You have no problems, because of course they'll die worthless. They'll drop in value, and you'll buy them back for less money. There you go. Let's see. What else? This is on Thursday. I sold, by the way, on Thursday. Correct, Uncle Bruce. That's how it works. Says Pat. There you go. So there you go. There's strategies here. Alrighty. We're down 500 on the Dow. Down 1.45%. We're near the low of the day. S&P down 86.9. Nasdaq down 404 points. Down 2.7%. That's where we are right now. The losers are Microsoft and Salesforce. Today is a great day, potentially, to write a put contract on Microsoft. Might be a good day to do that. Good day to write a put contract on Goldman Sachs. Great day to write a put contract on GameStop. Let's see, what else is a good day? Could be a good day to write a put contract on AMC if you love AMC. It's up to you. Vanek Vectors, a good day to write a put contract on Vanek Vectors, writing 250 puts, good for 3 or 4 months, maybe 255s. That might be a good move. Home Depot, 330, maybe 325 puts, maybe not. Microsoft, definitely. Apple, 140 puts, 135 puts, months out, might be an opportunity. Buying puts on Royal Caribbean would be an idea. Goldman, yeah, 391 a share. A good day to write puts on Goldman. Yeah, good day for that. Anyway, there you go. We're down 111 on Google, down 13 on Facebook, down 107 on Amazon. We're down 10 on Costco. There's a lot of put writing opportunities here available all over the place. I've been on the air for 3 hours, 22 minutes. What am I doing? I'm way over my time here. Anyway, Lorraine doesn't know how PayPal works, says Pate. Sean says, thanks, Uncle B. I wrote a cover call. Bama, I wrote a cover call on GameStop. Strike price, $220. Expiring October 8th. I took in $840. If GameStop stays below $220 on October 8th, I will just keep the 100 shares of GameStop and keep the $840. Is that correct? Okay, let me take a look at this. Now, you wrote what? 220 October the 8th. Okay, let's go up to October 8th. Let's go here, October 8th, wrote a 220, which is now sitting at $37 a share. 37. The contract is $37 to $40 right now. That's where the contract is at right now. So you took in $840, and you are on the hook to buy 100 shares of GameStop at $220. You have committed to buying 100 shares of GameStop at $220. You took in $840, which will bring your buy price down to $211.60 or something like that. Now, if GameStop stays below 220, I will just keep my 100 shares of GameStop and keep the 840. Is that correct? you will have to buy 100 shares of GameStop for $220 a share. Now, you might or might not have that much money lying around. I don't know how this contract was created with you and your broker. You would need $220 a share. Now, if the shares are trading at 190 on that day, you would sell your stock for 190 if you don't have the cash. You'd sell your stock for 190 to have 19,000. You have the $840, which gives you 19,800, but you're still going to need to get to $22,000 to buy the stock. Now, if you have a margin account, you can easily buy the stock for $220 because you have margin ability to do it. And it's possible that your broker allowed you to write this put using margin on the stock you have to bring this money in. Now, what you can do to alleviate this situation somewhat is you could do a rollover of this put because it's now deep in the money at the moment with the stock at 182.47. What you could do is you could look at maybe writing calls that are a couple of weeks longer at the very least. You might want to write, say, October 22nd. You might write maybe 210s and bring in $32 to $35, or 200s and bring in $24, which is not quite the money you need to buy these back. Or you could go further out and you could go out to October 29 and write two 10s for $36 or so, and bring yourself that much closer to the market. You could go beyond that, and you might need to. You might need to go to December. I'm just going to go here to see how far out you need to go. And I got to come back here. You wrote to 220s October 8th. Okay, hang on. I'm just going to do some research here for you. 220s October 8th. To buy them back right now, you need, let's say, $38, $39. Let's use the number 39. All right, so I go all the way out here to January's to bring in $39. You could write a 195 for about $39, maybe not quite, but just about. And that would only bring you $13 out of the money. Or you could go to January 2022's, and for $39, you would be writing something like 185s, which are just about at the money. And that's all premium, and that could all evaporate. If you were to write 220s for that contract, you would bring in $62. But you'd still be writing 220s, and you'd still have to buy the stock at 220. Now, let's think this out. If you were to buy back your call right now for $39, turn around and sell a 220 put. You bought the put, you're selling a put. You're selling this January put at 220 for 62. You would be bringing in $23 more in cash, plus the 8 you already have. You'd have over you'd have about $32 in cash per share in your account, theoretically. You'd have 32 in cash. You're on the hook to buy the stock for 220, but you have 32 in cash towards it. So you would now be paying 188 a share is what you'd be paying to buy the 220 contract. The stock's 183, so you'd only be out $5. That's not a bad move considering where you are right now. Because right now, you got to either buy your put back for $39, less the $8 you got for it. You'd lose $31 a share on this thing. I'm puzzled, Bama Babe, as how did you write a 220 covered? Oh, hang on a second. I'm reading this all wrong. Bama Babe, I apologize. I'm reading it all incorrectly. You actually didn't write a covered put. You wrote a covered call. It's a whole different ballgame. All right, it's the opposite effect. I just went through a nightmare scenario with you that I found a way to bail you out of, more or less. But this is actually a good thing. You wrote a call for October the 8th, which is a 220. This is why it's always important to get lots of sleep at night and read the messages very carefully. All right. So you wrote a 220 call and you received $840. That is correct. Right now, that covered call is worth, you can buy it back right now for $1.50. $150. So if you wanted to, you could stop this deal right now and just buy this thing back for $1.50, $150, and keep the $690. Or you could do nothing, like you're talking about. As long as the stock stays under $220 between now and the 8th, you get to keep all the money and your stock. That is correct. You are absolutely correct. You have another option that you could go with. You think that 220 is like way out there. What you could do is buy this contract back today for $1.50. Turn around and sell a new call contract. Write another call contract, a new one. This one you would write for maybe next week. If you wrote a 210 220, if you wrote a 220 for next week, you could buy back yours for $150 and write another one for $310. Or if you bought back your contract for $150, you could write a 210 contract for next week and get $425 for it. And you'd bring in another $250 in cash ballpark on top of what you got. Or you could, in theory, buy back your call for $1.50, turn around and write a contract for October 22, 2 weeks out, like 2 weeks further away. You could write a 200 for $770 to $870, or a 210 for between $560 and $660, or a 220, the same contract you have now, and receive $420 to $510. You could do that. So you have the opportunity to buy back and do nothing, don't do anything, or buy back and write a new call if you want to. Yes, you're in the control position. You're doing very well. You're making money, and way to go. Yes, that's it right there. Sorry for the confusion. I had myself going there for a while going, this is kind of weird. How did she get to write a put for so little money? Because she would have got way more money for the put than the 840. That's where I got to learn to read. There you go. Take the money and run, Bama. There you go. She wrote a call, not a put. People are going, hey, Bruce, she wrote a call. She wrote a call. He's tired. I get it. I'd be tired too if I had to do all the thinking he's doing, and 30 minutes overtime. Personally, you'd make $5 now and you'd get out of it, or you can wait a week for an additional $3, but risk the chance the stock runs up on you. Exactly. Clay, Bama babe, you're good. If stock is below 220, it'll expire worthless. If things jump to 210.15 and you get nervous, you can then buy them back for less than you sold them for. That's right. Even if the stock went back to $215 a share, but there's only 1 or 2 days left to go in your contract, there'll be $1.50, $2. You're still in the money because they're worthless. At the end of it, they're still worthless. Under 220, you win. Either way, nice play, Bama, Bama, babe. Okay, there you go. There you go. He figured it out. There he is. He figured it out. Yay, Bruce is back. He's back. He finally got it. See, even Bruce is back. See, there you go. I still appreciate the run through the put of the scenario. The other scenario was something, wasn't it? There's ways. Strike that, reverse it. For a tired misunderstanding, that was certainly a lot of brain power. I learned something going through that process. Have a great rest, Uncle B. Thanks for a great show. Oh, man, 1.5. Buy it now and close it out. Uncle Bruce, I love you when you get it wrong sometimes. You eventually get it right. The thing is, right now, it's only $1.50. Here's the thing. If you don't do anything, you're only going to make only $1.50 more from now until the 8th of November, 8th of October. So that's the rest of this week and all next week. That's what, 10 days? For 10 days, you're only making $1.50. You've already made $6-something. You're better off, in my opinion, buying this one back now. And even if you write a 220 for 2 weeks further out and get another $5-something, you're adding $3.50 more to this price, writing a 220. On the other hand, you could be more aggressive and write a contract for just next week. Buy this one back and write a 210 for next week. So you're $10 closer to the market, but you're still a ways out. But you're only a week further out from expiry. So you're 17 days out, and you can get $5-6 for that one. So I'd like to see you lift your money. But you don't have to do it today. You can wait till tomorrow or Thursday. By Thursday, this contract might be $1.25, $1.10, if the stock is still down here, right? Now, if you don't do anything, and the stock goes up to 190 tomorrow, the day after tomorrow, don't worry about it. Because even if your contract is trading at 3 again, back to 3 from $1.50 or back to $3.50, don't worry about it. Because what you could do then is buy it back at 350, still making a profit, and rewriting a new contract for 220 2 weeks up. You'll probably get $7 for that one. And there's your $5-6 spread again, and enjoy premiums over the next 2 weeks as this thing slips. Bama Babe, you've got options. Rob, 150 for a week, not worth it personally. Buy back the call, wait for the next rise, write another. There's what they're saying. Somebody's taking courses out there. Bama Babe, Uncle B is testing us. And it says a lot about a person that admits when they're wrong. Bama, would that be a buy to close? Would be a buy to close, and then you would be sell to open when you do the next one. Yep, you got it, Bama Babe. You got it. Yeah, I love it. That's awesome stuff. You learn a lot, even when you're incorrect on a position. You know, I'm barreling ahead here on this put when it's really a call. But I learned a lot. You're learning a lot, and you're also catching me, and you're figuring it out now. You're graduating. You kids are getting smarter. This is what you paid for to be here, and you're gonna make some money. So I like it. I like it a lot, folks. Hang in there. We'll see how this market does in the next couple hours. We'll watch this closely together. I'll be back at 3:00 this afternoon. I'll get a bit of a rest now, and I look forward to seeing you this afternoon. And we'll see how this market wants to treat us. And we'll see what's going on. Okay, I'll talk to you a little soon. A nice $7 gain, just about $700. That's right. I didn't pay attention to technos much, but that W on Rocket Lab chart for the day, interesting. There you go. Rob, have a great break, Bruce. Thank you, everybody. We'll catch you at 3:00 this afternoon. You guys hang in there. We'll talk to you real soon. Bye for now.